So those are the main three ways. The other way that they make revenue is being a broker dealer. There's no buy fees. What they do is they seek out 10 plus different exchanges, finding the best rate with their order routing system, and then the savings that they can find on the spread, they will pass along to the customer if it's a market order. And you can actually, they even give you payout and trade rewards with the VGX token for that particular benefit, which is cool. But I did want to highlight that because it is the primary revenue source for the company. So future lifestyle apps, or functions besides banking and the debit card that they've talked about on the roadmap is, IRAs and lending and potentially a credit card, and expanding to Europe, Canada, and they're waiting on a BIT license to get into New York. They currently operate in the 49 states that aren't New York State. I think that pretty much covers the bulk of what we're kind of looking at. Oh, no, sorry, one big one I forgot. They have a partnership, a 50-50 LLC partnership with Market Rebellion, and they're going to be adding stocks to the platform sometime in mid-2022, and that will bring the ability for purchases of stocks with crypto. And, so think about this. You're going to have an app that is easy to on-ramp from your bank, can replace your bank because you have, direct deposit, checking, debit card. You'll be able to buy stocks. You'll be able to buy digital assets, and, and also peer-to-peer payments will be another product that's in the roadmap. So think Venmo, PayPal, being able to transfer assets among the community. They also have 2 other partnerships and deals because they're doing a lot. They're a small company, but they're doing a lot. Avalanche they partnered with to bring in some aspects of DeFi. So they're going to bring in some, hopefully additional streams of revenue to us via an Avalanche partnership. Hopefully that'll extend to the Terra ecosystem. We shall see. And then they have another community benefit, which is some of the founders from Voyager actually started the Particle Foundation, where they take real world art and they break it up into multiple different particles or pieces of ownership in NFTs for the real world art. There's a Banksy that's coming up for auction that they're giving first dibs to the Voyager loyalty members on. So they're offering us another form of asset acquisition in precious art. So lots and lots of benefits. Because I didn't get a touch on it earlier, I did also want to mention incredible growth. The company went from, roughly 30 employees or so to over 275 now. They're looking to double that within the coming months. Their customer base grew from less than 50,000 funded accounts in December of last year and less than 500 million in assets under management to over 1.1 million funded accounts with over 2.7 verified accounts downloaded the app, and over $7 billion in assets under management. And we're expecting a really good quarterly report that maybe exceeds those numbers even. So, you just think about that growth is incredible. It's one of the fastest growing.
I was going to say, for everyone that's either new to investing or whatever, like one of the key elements of bringing things like stocks, not dissimilar to how Mirror Finance does it on Terra, but the ability to bring in stocks adds a benefit in that, when you go down your list of crap you can buy, because let's say you have $100 today and you need to get something, the ability to find divergent assets at any given time is really helpful. So, for example, let's say I'm up doing pretty good on some crypto, or let's say I earned interest on my USDC on Voyager or whatever. I want to be able to take that yield or the gains I got somewhere and find something that I want that's down is kind of what I'm looking for. So, for example, if Apple stock is down and I know that's as good as gold, I would want to get some of that with some of the yield that I made elsewhere. So having these variety of price exposures is really cool. And I think what Voyager is intending to do, correct me if I'm wrong, but is to incorporate somehow the VGX token rewards program somehow into the stock trading and whatnot, in theory. So
that would be nice.
I'm hoping that they add a lot more interesting things regarding that. But you really do want to be able to get stock trading exposure on the same platform. But if you look at what Robinhood did, another important thing you want is the ability to get that exposure if you want it, but have it in a tokenized manner where you can get fractional stocks. Because like you may not be interested in buying a whole Apple stock, you just have $50 or whatever. To be able to get a partial Apple stock is really helpful, and that by itself can be very powerful in sort of an investing strategy.
Yeah, absolutely. And eventually, when they do have the stock, the trading platform out in the desktop app out, there's going to be incredible opportunities that will be linked to the loyalty program. I mean, they've talked about having margin as one of the products and options and derivatives. I'm sure will be coming, and I'm sure that being that those will be linked in some way to the Voyager loyalty membership tiers. Maybe you give people that have more skin in the game, so to speak, with their investments on the platform, or are accredited investors, will have the ability to have certain benefits that may not be available in lower tiers. Kind of solve some of those potential risks that they might want to avoid. But we haven't got a whole lot of details on that yet, but because it hasn't launched, but it's a lot of speculation.
Whenever I'm looking for a growth story, I try and consider what I like and the things that I like. But again, I'm always looking for that wave of what people like. And let's face it, when we all started in crypto, we had one exchange, whether it was Coinbase or whatever our first exchange was, and we were just comfortable with Coinbase. That. So the more Voyager can make a one-stop shop, a lot of people will never leave that one-stop shop. Some people will want to learn more, and they're going to get KuCoin, or they're going to learn about TerraStation Wallet, and they're going to get all degen. But the vast majority of people are just going to want a freaking one-stop shop. They're going to want to be able to trade stock. They're going to want to be able to earn money on their stable coins. They're going to be able to want to Venmo their friends. They're going to want to be able to buy crypto. They're going to want to earn yield on the crypto that they bought. And based on what I've seen, I think Voyager has the best interface going. And yeah, the roadmap's awesome. I mean, there's definitely room and things that they can do, but they got a pretty good head start for a company that's really not that well known. And so like I'm at my office right now, and it's one of those kind of, I have my own office space in like a fractional office, where there's the same three people kind of manning the front, and they do the phones and everything. And so I actually gave my referral code to Voyager. And I said, hey, if you download this and send me your Bitcoin address, I'll give each of you guys some Bitcoin. I'll send it to you right now. And only one of them's taken me up on so far. He's going to show the other two how to do it. But they don't know anything about crypto. But I was just showing them, like, look, you can earn 9% on a stable coin. Obviously, lunatics know about, other things. But for them, like 9% on a stable coin, and I'm like, look, the Bitcoin that I'm going to send you, you can earn 5.75%. You can sell it and go do whatever you want, but I strongly recommend you just keep it, probably even buy some more, right? And then earn some yield. And I think that one-stop shop is so big for a growth rate that I heard about VGX through Cephii. He was tweeting about it, that it was beat up and down. I bought some. I did the Cephii thing when it went down. I bought some more. And I realized, like, crap, this is a pretty good growth story.
Obi, I wanted to mention as well, thank you for that, Hutch. I hear a lot of stories like that of sharing with coworkers and stuff. It's really true. It's the best thing you can do to help get them into it. There was a couple other things, Obi, that you might be able to elaborate on better than me. As far as partnerships with Voyager, there was, I believe, a lotto deal that they had, as well as Alameda and a whole bunch of sports stuff. I don't know if that's something you guys would be interested in going into, but I figured it was worth mentioning.
Yeah. There's just so much to cover that they have. So yeah, they are heavy right now getting the word out. They're going to start utilizing this marketing growth pool that they have, and getting the word out and expanding to different communities They have Alameda Research invested $75 million into Voyager, and they have a partnership where they're going to work on, the synthesized stocks, on the overseas side, and eventually probably play some into the derivatives or NFT space.
$75 million into Voyager.
They have a partnership with Mark Cuban and the Dallas Mavericks, where they had a large advertising activity. So that's not a bad person to have a 5-year deal with and be in your court. He's a pretty smart dude, and he's even into DeFi. So we're excited to see what comes out of that. They have Landon Castle and NASCAR. They've got a team. They just partnered with Colleague Racing, and so they've got them a really good car and a really good team, and hoping for a good upcoming year. They've got they did a partnership with the National Women's Soccer League, where they partnered the whole league, and they're paying the actual soccer players and getting them set up with accounts and using them as a mouthpiece to get the word out through their influence. There's just so much. They have a deal with CryptoTrader.tax, which is rebranding to Coin Ledger. So they're giving
so it's a
anywhere
community
from
mashup
$50
here.
to
We have a
$300
VGX
license out
and
for free
Luna
for
community
2021
mashing
taxes. So you can, if you download the app and set up an account, and, I think the comments were even just a verified account, not even funded, but that'd be a way to, check the platform out and, get some tax software. So that's one thing I encourage everyone to go check out. It's heavily Ethereum based in terms of, DeFi right now, but it does link into their exchanges like Coinbase and KuCoin. So, it's not just your Voyager statement. So definitely a good reason to download the app and at least check it out, even if you don't fund your account. If you do fund your account, I think you'll very quickly see it's incredibly easy to use and to start earning some passive yield, compounds every month. Some of the rewards pay twice a month, and then, some of them are usually on the first business day or the first calendar day even. So,
Go ahead.
No, I was just gonna say it's super easy. It's very, it's a great on ramp. It's incredibly easy. Like I always use the expression of, if my mom can do it, anyone can. So, it is extremely user friendly. It's scaled up now. I mean, they've gone through with that explosive growth that they had, both in customer base and funded accounts. They rewrote their programs on the fly. They've done scaling to support 10 million customers. Like, they're ready to rock and roll and get this ball rolling even further when they expand. So tons of great things to look forward to, additional products in the roadmap, and it just comes down to execution and getting the infrastructure built, and it's only a matter of time before they're able to allow more transfers and hold more assets and offer more rewards.
One of the things that I wanted to touch base on too that Obi didn't mention about the Avalanche partnership is the fact that they're going to add collateralized loans at some point. We had the chief marketing officer or chief business officer of Avalanche on our VGX Heroes AMA, and they alluded to being able to borrow against your assets similar to Luna. So you'll be able to borrow against your Bitcoin, Ethereum, and different assets on the platform. So that's something that's coming as well. Anybody who wants to download the app too, I did put my referral code at the top. So if anybody's interested, if you trade $100 on the app, you get $25 in free Bitcoin. So if it sounds appealing to you and you're like, I want to try Voyager out, go ahead and do that. Or go ahead and use that code and get yourself some free Bitcoin. I wanted to move on to the next question. And this is really for Hutch and Sephi as well. So obviously you guys are big lunatics, and we know that. Can you explain to me why you chose to allocate a portion of your portfolio into VGX? And what is it that differentiates Voyager token from other utility tokens such as FTX, Crow, Cell, or any other platform coin?
Yeah, well, I got quite a bit of VGX earlier than I had Luna specifically. And I was sort of already into the stock. I'd actually moved most of my, or actually no, not most, all of my IRA to Voyager, because I just see them as like the next Like they're the
VGX
sort of
heroes,
like
show up, brothers.
Amazon.com type, centralization play on crypto. So I was pretty heavy in the. So I'm pretty heavy in the company. Just for not, I'm not in the company, but my point is I'm pretty heavy on my exposure to the company. So that's just kind of my background here as far as full disclosure and such. But I looked at so when I started out like in January or so in this, or December, something like that, I was looking at the various platforms, and at the time I don't think FTX, I'm not sure if they had a token at the time, I don't remember when they first opened theirs. I was looking at crypto.com and some others, and what I wanted, at least as a US customer, I wanted a really, really easy on-ramp without a as far as banking is concerned. And comparing the two, I just liked the layout of the Voyager app and the ability to sort of see what your various assets are and what your not your cost basis, but your, really just is your position down or up, first of all, because you tend to forget after a while, unless you want to use another app to sort of record all your positions and whatnot. So I thought the layout was really good, much better than, say, for example, crypto.com's at the time. And at the time, like the coin was relatively cheap when I got into it, and was and compared to sort of like crypto.com's that had already kind of like ramped up before I got into it, I sort of figured, well, if I'm going to get into one of these, I might as well get the better deal at the time in terms of coin price. Just started looking into these types of companies at that time, both from a stock investing and a coin investing perspective, and then sort of got into it. I didn't necessarily get into the ecosystem specifically because I thought necessarily that VGX would, say, outperform other ecosystem coins. The reality is I had no clue on, which company was going to do what, and, whether or not these so-called exchange tokens, which became a thing really with Binance creating a token. The craze sort of began right around when Binance took off. And theirs is a very different thing, though. That's a whole, Ethereum copy in a sense. It's not a pure loyalty program type token in the typical sense. So there are pros and cons to the different chains. Like Crow, for example, which is crypto.com's deal, is a Cosmos-based coin. It has a different sort of style and set of debit cards and things they offer. Voyager's getting a debit card soon. It has certain features. Some of these centralized plays have like higher baseline interest on your stable coins, and then some of them have better cashback rewards on, say, debit cards and things. So each of them is a little bit different, I think, depending on the size of your portfolio and what you're doing. Each of them is going to have a different like pro and con to it.
Exactly.
To me, it was just kind of just a play on the so-called, like exchange token, and, seeing where they take it. Now, an argument can be made that, DeFi makes some of the centralized exchanges maybe perhaps less relevant to some people, and that's certainly true. But at the same time, I think, like I said before, a lot of people need the centralization, custody, and everything for lots of different reasons, and I think those people will still be using these things. And a lot of people that I sort of got using Voyager sort of really liked it, and thought it was an easy-to-use platform, because many people aren't necessarily trading a whole lot. A lot of people are just buying and holding, and the reality is if you go to Coinbase and do that, you're getting zero yield on most of your things, or
Exactly.
Nominal, or on or just so few things that have yield. And then if you go to Voyager and do it, like the average person,
and if it does have yield, it's like hardly
I
anything.
tell my friends, okay, look, get the stuff. If you're not sure what you're getting, like get the stuff with some yield on it. At least throw your stable coin, get some stable coin yield, get some things with yield on it, so you're sort of always growing your portfolio in some fashion. You can learn about the nuances of tokenomics and this and that and the other thing later, because most people don't want to hear that whole lecture right up front. But then at the same time, if I'm going to sort of, pitch, sort of like the one of the highest growth coins in the world, I'm going to basically tell them about Luna. If I'm going to tell them about various exchange tokens, then I'm going to talk about Voyager is one of them. So they're different types of exposure, price exposure, essentially, looking for different sort of things to happen for the various coins to moon, right? So everyone wants their coin price to go up, and how that happens with Voyager is very different than how that happens with, say, Luna.
And yeah, for me, that's a great segue to me. Coming from TradFi, I can't help but diversify. So thankfully, I did learn about Luna early. I did deep in pretty hard
sure
as far
if
as
you
an
guys can hear me on the
allocation
stream
to
on YouTube.
my
If you
overall
can,
percentage,
let
what
me
I
know.
wanted
Drop
to
a
put
comment
into
down
crypto.
below.
And then that kept on growing the more I learned about crypto and the more I learned about Luna. But there's always a little part of me that likes to diversify and likes to have coexisting plays and things that don't need each other to go up. Like we've seen Bitcoin decouple from Luna. And at first I didn't know, I'll be honest. Sefi posted a chart. I kind of looked at the chart. I'm like, this thing looks beat up. I've been listening to this guy. And one time I tweeted, Sefi doesn't exhale CO2, he exhales money. And so I'm like, I'm just going to listen to him and buy some. And that's actually, when you hear about his trading style, that's what he does. He hears about things from people that he respects on Twitter, and he'll a little bit. And then it's kind of on it matters to him. It's on his little watch list. And that's what happened to me is I bought some probably in the high threes. And then it went down, maybe low fours. And then it went down to the threes. And I started paying more attention. I asked him some questions on Twitter. He was very generous and he answered. And I was like, okay, this looks interesting. And then I started jumping on Big T's calls more and learning about Voyager. To the point on this last dip, I got enough to be in the second highest tier, an explorer, which also increases my yield on Bitcoin. And I realized for me, I have some Bitcoin, and I did actually swap some for Luna during the last Luna dip about a month ago, which obviously proved to be a good thing. But I didn't sell it all. The lunatics are like, why didn't you sell it all? And Bitcoin Max is like, you sold the Satoshi, you're crazy. But whatever, I'm happy. I'm going to keep some Bitcoin. And by getting to the next tier, I actually get a bump on my interest rate on Bitcoin. So I just kind of got more entrenched in the VGX story to where I wanted to be whatever on the business end of the business deal. I actually got some stock too in an IRA, found out the ticker. So between the token and the stock, I started with a little bit, and then kind of the more I learned, the more I wanted to invest, and the more I invested, here we are.
What about you, Obi?
How I got into VGX? VGX was one of the first ones I bought when I was on my journey in 2020. I was paper trading crypto, looking at my, overall investment portfolio, and made the decision that I wanted to get into crypto. And I got tired of paying fees on Coinbase. So I was looking around, Gemini Active Trader, Coinbase Pro. I'm like, yeah, these maker taker fees are okay. But, I heard about Invest Voyager, and I found the platform, and I loved how easy it was. And it was a lot more analytical because I could do, sorting by year, month, week, day, hour, etc. And there was more assets available that I was interested in buying. So I looked at it and I, was like, okay, this is cool. And at the time they were running a promo where if you owned a certain number of VGX, you got an interest booster. I'm like, oh, that's cool. So there's utility behind this, and it's a new company. I think, more utility will eventually be added. So I'll go ahead and buy this. And then I saw Scott Melker and Rob at Digital Asset News talk about it, and they started talking about its price potential. So I dug deeper into the company and tokenomics, and just started there DCAing and growing a base of Voyager as I was starting to refer people to the platform and tell them about the opportunity. It was also around this time, I think it was December last year, I started also buying the stock. So in terms of how I view the investment right now, I treat it like a rental property. I get the 7%, interest payment on the first of the month. The price of the house is probably going to go up, right? And I don't have to worry about any, tenants, toilets, and trash or impairments. And if, for whatever reason, the rent does change, I'm going to sit on the HOA and vote on it. So I just kind of view it in that lens. It's a passive income vehicle through the staking rewards. Exactly. And it gives me utility for using centralized rails to buy crypto. So if I'm not in my DeFi space, because the the Terra ecosystem and leveraging Luna is my biggest investment, but Voyager's right behind it. So I like to utilize both strategies.
Yeah, and I think that diversification is huge, and it sounds a lot the same for Hutch, Seffi, and you. Is that Voyager is kind of your centralized play, and Luna is your decentralized play. Obi, could you talk about the tokenomics of Voyager and why they're poised to have a breakout 2022?
So I'm not sure if you guys can hear me. Can you guys hear me?
Financials or metrics, or the supply that we know is staked. And could you go over that?
Yeah, so they've gone through. There's a lot of excitement and speculation. Voyager kind of got hit in the game stonks craze of people coming over to buy Doge, and this was around February of last year, or excuse me, 2021.
Can you guys hear me?
And they ended up getting a lot more growth than they thought they would. At the same time, cryptos were blowing up. The market was super hot. And people were hearing about the utility, buy your 10,000 tokens, get some interest.
When
Here's
they were
what's
at
coming.
10,000
Steve
tokens, that
at
was
the
like
time
the
was
best time to purchase. If anyone bought
very
then,
forthcoming with information, and they were giving us monthly reports and telling us the statuses on the growth of the company. And it was a fun and exciting time. And it got a little overheated. A token went from 14 cents up to $7, and there was some running before they walked, so to speak, and there was a pullback. And after that large run up, there was a long, drawn out. After that distribution phase, we've been basically in an accumulation phase for the past better part of 6 months. Now that the VLP has launched in September, we're starting to see more and more people entering the VLP program. And the great thing about the VGX token is it doesn't have like a unbonding period in terms of staking and unstaking. But what it does have is those loyalty tiers. So if you're holding 500 or 5,000 or 20,000 and you really like using the platform, you're very unlikely to sell below the loyalty tier that you've worked so hard to achieve. So that kind of in itself works as its own form of lockup and loyalty. And what we're seeing right now is about, I think, 71% of the supply is staked. So, but there's very few amount of tokens that are really floating right now. They've added liquidity by being able to purchase on FTX and Coinbase. Before it was like 96% Binance. And so now we've got, Gate and, those other exchanges. And we're running into a situation with the user growth that we're seeing from a tokenomics perspective. The month-over-month gains that the community is making is going to basically create a supply squeeze. By the time the Europe launch happens sometime, March, April, there probably will be, at least by my estimates, there'll be less than 10% of the supply floating. So we should see a pretty healthy supply squeeze by the time we start onboarding new users in different jurisdictions, and that should be highly price accretive. So, and once people start seeing those price increases, we'll see if we're going to enter into a distribution phase or not. But I imagine that with the fundamentals and roadmap being so strong, that it's going to be hard for people to want to part with their VGX. So hopefully it continues to put upward pressure on the token, and we'll see how the team executes.
Okay, so the next question is statement is Voyager has a 7% inflation built into the tokenomics. What's your thought on this mechanism, and ultimately, do you believe it's good or a bad thing?
That's one thing that I really...
Yeah, I think it's a good thing, because it's how people stay in the token once they've achieved their tiers and they're able to earn their passive income. They can sell that and free up their time, and then those tokens that re-enter supply are being able to be snatched up by
some people
the
that
people that are
VLP.
starting their journey and joining the VLP programs. So I think that Voyager needs to have an inflationary token because their user base is also inflationary, and they don't want to continually have to revise the loyalty tiers in order to create better float. It also has the added benefit of Voyager doesn't have to go out and buy those tokens on the open market, right? So it's a sustainable way for them to offer utility and rewards to their customer base through math and tokenomics, as opposed to putting P&L pressure on the bottom line of the company, so they can then turn around and use revenue that they're gaining from other strategies to continue to pay the yields that they're paying. So I think it's absolutely necessary. I think the growth pools are necessary as well. They're gaining about 15% loyalty membership month over month. So the buy side demand is outstripping the token emissions by about 10-to-1 ratio. So it's, in my opinion, it's really a good token design for its use case.
Yeah, and the fact that the growth pool is majority, if not all, VGX, really incentivizes them to make this thing great. Whereas, if it were something else, they may say, oh, okay, well, we don't care that much about the token. But for them, it really depends on it as far as their marketing standpoint.
That's actually what I was getting ready to go into next. Can you explain to everybody in the Luna community why the Voyager has a vested interest in making VGX as valuable as possible?
Well, it's what Sunzu just said. It's part of their marketing strategy and their budget. It's built into the code, into the tokenomics. As the VGX token increases, so does their marketing reach. So they're able to, give away VGX in different amounts, whether that's to influencers like Rob Gronkowski or Landon Castle, or to incentivize user growth in Europe or other, jurisdictions that they might launch in. They really have that as a tool. So they have an interest in making their utility program successful because ultimately they're able to increase the stickiness of their customer base. They're able to use that as a cost of acquisition and cost of retention tool. So it's helps the bottom line, helps the shareholders. So it's a win-win across the board. I don't see really the downside in it or any kind of fear or uncertainty. They've expressed interest in allowing governance aspects of owning VGX so that the community has a say whether or not we want to increase or decrease the stake and reward rate will be eventually something that is available to us to vote on. So, for a publicly traded company to be as honest and forthright in their information and give the rewards back to the community, that's a huge differentiation between Voyager and some of their competitors. They are returning the majority of that revenue back as customer rewards, or they're using it for mergers and acquisitions. They just hired somebody to work in corporate development, so they're looking to add additional revenue streams and maybe grow through acquisition as well. So, this is all possible because they have that budget and that marketing reach and that loyal customer base. And most of their advertising is word of mouth. It's the referral programs that are tied to the VGX rewards. They're not spending hundreds of millions of dollars on sports partnerships to put their name on buildings. They're paying hundreds of millions of dollars to the community in rewards.
Crypto.
And that's the kind of company I want to be associated with, and why I put my centralized play capital in Voyager's hands as opposed to Crypto.com or elsewhere.
Fantastic. And then we're going to conclude this portion. This is the last question for the VGX side of things. And we're going to answer questions that any of the Luna or the lunatics have. And then we're going to jump into the Luna side of things. So everybody get ready because the fireworks are about to go off. I'm really excited to learn about Luna. Obi, why should somebody in Luna or the Terra ecosystem invest into VGX, in your opinion? And that's the last question.
I think it goes back to something that Hutch said. It's having diversification. If you want to buy something that isn't in the Terra ecosystem and diversify, or maybe you have friends or family or referrals that aren't comfortable doing their own self-custody, there's really no better platform to bring them onto, and you can get referral benefits from that. You can take advantage right now of getting interest rates on things like CFI said about Bitcoin, where you're not going to get that type of return on other platforms. And it's a really good place to use, even if you're not funding the account and you just use the app as a verified user and you're just using it for some quick analysis. It's a useful tool. But I believe that if you want to set yourself up for some passive income and refer your friends and family to somewhere that's really easy to use before they graduate to self-custody, that's a good reason to own it.
Thank you so much, brother. So I want to welcome any of the lunatics up to the stage. Anybody that has any questions in regards to anything, I'll give you guys a couple minutes to come up here and ask questions if anybody has any. If not, we're going to go ahead and move on to the Luna portion of the program. So Obi, Sefi, and Hutch, thank you so much for all the information in regards to VGX. And we're just going to give it a couple minutes, and then we'll go on and move on to the other side. And I also want to say thank you, everybody, for being here. It means a lot. This is what it's about, is teaching each other about ecosystem and other things that you can get into. And I'm extremely happy and pleased with the turnout today. So I just want to say thank you for being here. It means a lot to me. So we have 2 people who have requested to speak. We have Mandivis. We have 3 people, Caleb and Stefan. We're going to go to Mandivs first, and then we'll go ahead and go to Caleb, then Stefan. I'm going to accept all of you guys.
Hey, thanks for giving the speaker. I have a couple of questions. I already tweeted CFI all 4 or 5 questions, but major one is like when VGX guys enabling the transfer for Luna, because there is a really like a downside for me to keep using the platform, because I'm losing so much stacking rewards and as such, and trying to avoid the capital gain tax also, so don't want to withdraw anything or sell anything. So just want to know when you guys listing USD and enabling transfers for both USD and Luna.
Yeah, I'm in the same boat. I have a lot of Luna still on the Voyager platform, and I'm emailing and tweeting asking for them to enable transfer ability. They have the block daemon partnership. I think that the one thing that's taking the time, quite honestly, and that's the holdup on that, is because they're a broker dealer and a publicly traded company, and they have to comply with all the FinCEN rules. They have to be able to, when they build out that infrastructure to allow the transferability, they have to make sure that they're not funding terrorism or allowing funds to be sent to nation states or accounts held by individuals that aren't within their footprint, so they don't have legal issues. So I think that once they have a comfort in their ability to build out that infrastructure, that it will be enabled. But right now, they have to both have the team and the hires to be able to build out the infrastructure, and they also have to make sure that they're compliant with all the regulatory needs.
And the new member to their board of advisors right groups to definitely on that path.
So there is no short-term plan for that. That's what I get it, right?
We don't know what their plans are. They don't announce when they're going to enable transferability of coins. They just when they have it, they just kind of put out a blurb, hey, here's our token of the month, or transfers are now enabled on this asset. So we just find out about it through company communication. They don't telegraph the move that it'll be eligible. By the way, this isn't something that's unique to Voyager. Coinbase and some other exchanges don't have the native assets either, right? They have the Ethereum wrapped versions because that infrastructure is already built out. And, there's obviously rumors that, that capability will be built out. But right now, I think the exchanges and brokers are playing catch up. And that's another point that I also wanted to make about Voyager being able to list it, is because they're a broker and not an exchange, they have to be able to have a custodian and an exchange that they can go to that can custody the assets on our behalf if we choose to hold the assets on Voyager. So that's another piece to the puzzle.
So can you at least give interest equivalent to the staking rewards on the Terra platform? Because you can put the same amount of Luna on Terra platform and get the staking rewards up to 9% or whatever it is, right? Currently, I'm not even asking 20%.
Yeah, it's stuck at the pre-Columbus 5 rates of 4% right now. They haven't updated it to the Columbus 5 rates that are closer to 8 or 9%, or at least that's what I'm getting on Stater Labs. But that's auto-compounded, so.
Yeah, and last one, any plans to list USD or no?
There hasn't been any kind of moves telegraphed that they're going to. Their primary stablecoin right now is USDC, and that's where the majority of the rewards and benefits are programmed off of. So again, I think it's once they have the ability to, work with a partner on the custody and staking side of the asset, and support the infrastructure on the back end, right? They got to be able to support the transfers. That if we ask for it, they're going to bring it because, they're a broker and they want us to hold and trade platforms on their, with them. So it just really comes down to them scaling out the infrastructure and us asking them to, bring forth what it is that we want to trade.
One of the things I wanted to mention and touch base on too is that, there's power in numbers, guys. Like sending individual emails and doing what we're doing right now is good up into a certain point. Their job as a broker, and this is something that Steve has talked about many times, is that their job is to provide us with services that we like. Obviously, there's going to be things that they can and cannot do within their regulatory framework. But what I suggest we do, Sephi, why don't you put out a post in every single person in here for the bonding of community sense. I mean, we're all here. We can do it. Take a second, like that, and retweet that. And I guarantee you that Steve is going to look at that and see that. Pin Steve to it, be respectful, and do something along those lines so he sees that's something that we all would like. And I'm sure he's aware of that, but I just think that would be a very powerful statement coming from the VGX community and the Luna community. It's just my thoughts.
And let's take CoinLedger in it too.
So I stopped tweeting at day 25. I said, no, there is no point here. It's all going in black hole, And I stopped referring customers to use Voyager. This is the second thing I want to tell you guys, because the incapability of letting the transfers done of major the tokens, that's a downside. It means you're not going to survive long. Trust me, I'm the first customer. Maybe that will start with others who have invested in Luna and cannot do anything with their Luna. This is depressing. I cannot even imagine CFI is giving me every single day new ways to make more Luna. I cannot even implement any single one out of that. So,
well, we're sorry that you're going through that. You're not the only one. And
I understand, but the frustration start building up, right? I refer so many.
Okay. So we're going to go on to the next person that has a question or speaker.
Oh, that guy was.
And that was, I believe,
I
Stefan.
think I've seen that guy on Twitter, and
holding this. I guess kind of a
actually, I've even seen that guy on my YouTube. I think he goes on there and he's angry about
there would
Voyager.
be any
He hates
capability in
Voyager
the future to open up some of the DeFi
because of the whole Luna transfers,
through Anchor, Nexus, all the whole Terra ecosystem and future ecosystem, and kind of will expose that to the mom and pop who just want to sit on Voyager, but then get exposed to a lot of those higher yields that Terra ecosystem will provide. So, obviously it sounds like y'all don't have the answers to that, but just curious, like if we've got any signaling from the team on, is that within their capability to maybe integrate directly to the protocols, or are there similar partners? You mentioned like the Block Daemon or some partners like that they could partner with, like to go through maybe directly stake themselves through Stater Labs, or integrate directly with some of the DeFi protocols.
Yeah, so if they have if they have the right infrastructure and partners to allow that, I'm sure that they would offer it to us if we ask them for it. The only DeFi partnership that they've announced publicly at this point in time is with Avalanche. So that is something that they've actually said that is coming, and the Ava Labs team has also said that's something that will be coming. So I think as a Lunatics or Terrans community, we need to express, continued interest in bringing forth, Anchor Protocol and some of the other more exotic protocols to be able to bring higher yields to the platform. And I guarantee you, if any executive team in the centralized space is going to pay attention to ways to bring higher yields to their customers in a safe way, Voyager will do it.
Exactly.
They want to have the competitive advantage of being able to make people get back their time through financial freedom. And, that's really kind of what the mission is. So I'm waiting and hoping that is something in the roadmap, but I understand that it's going to take a little bit of time, both in hiring people that are capable of building such tools, but then also, making sure that they have all the legal and regulatory compliance in those acts. And I think having people as a board advisory like Brian Brooks, the former comp controller of the United States and CEO of Binance US, is going to be helpful in that regard of navigating those waters.
It's a very good question. Do you have anything else, or Stefan?
No, yeah, that's it. I think the regulatory and, how much they're actively, engaging and researching and development on that. And, just not Terra, but, there's a lot of other, Avalanche is a great place, Phantom, Unitarian, there's, a lot of great places to do. So I think if they can overcome those hurdles once, it'd be great. But that's it. Thanks, everyone.
Yeah, I think they've also, they have also exposed interest in NFTs and bringing that, via the Avalanche and FTX partnerships. So I'm sure they're not going to want to give up much ground to Coinbase and Crypto.com in any regard. So and they definitely have irons in the fire in a lot of the space.
Thank you for stepping up here, Stefan. We're going to go move to Montana Haas. Welcome to the stage, brother.
Hey, thanks, guys. Couple normie questions for you. One, I'm just trying to better understand how the yield is being generated for some of these LPs, just like some of the core ones, even like AnkUST on Anchor, etc. I'm just trying to understand where that yield is coming from for some of those LPs, and then just maybe if you wouldn't mind sharing, as far as on and off ramps go, your preferred on off ramp or centralized exchange, I guess, to port into the Terra ecosystem.
You can go ahead, Sefi, Hutch, or Obi.
Well, right now the simplest ways to get your bank account connected to an exchange that will, at least for U.S. customers, is going to be through probably something like Voyager or Coinbase, and then you're going to send USDT to KuCoin. That's one way. The other way would be get wrapped Luna or wrapped UST on Coinbase, and you can send that to you could use what's called Terra Bridge, and you can bridge to a Terra wallet that way. So that's Terra Bridge is a system that's provided by originally, I think, developed by TFL. The other way you can get there would be just take Wrap Luna, for example, on Coinbase. You could send it to KuCoin to the Ethereum address that they give you. And then when you send it out of there to your Terra Station wallet, it automatically sort of converts to the Terra version. So there's not a swap fee there. So it really
so you
depends on
don't
what
have to
you're doing.
convert it? Like once
No,
you
you
send
don't.
it to KuCoin, you don't? Oh.
No, because what it'll do is they have, I guess, a liquidity pool for both the Ethereum version, the wrapped version of UST and Ethereum, and for the Terra version. So when you send out or in, you can send out or in either one, and they'll just sort of exchange it one-to-one automatically for you. So
that's really interesting. I have some friends that still have some Wrap Luna. Have them try that and see kind of what the fee slippage is for doing that. But I would say if you're brand new and you don't have it and you have USD, like fiat currency, the first method he said, that's what I started doing if I'm dollar cost averaging in. But a CoinPro.
And if you're totally new to crypto, or you want something even simpler, then technically Kraken now has native Terra, and you can send directly out. Connect a bank account and send out directly. And the other place that has it is Crypto.com, which has native Terra Luna, and you can send that out to your wallet. So
I found their spreads to be not
this one that has native Terra
Craig
or native Luna.
Kraken. Sefi, I did find though that their spreads aren't great, and it's kind of tough to get fiat onto Kraken. And Crypto.com, same thing. Like I set up an account when Luna was in the 50s, and I was going to DCA in, and I said, you know what, I'm just going to do native Luna with Crypto.com. But I looked at what I was going to have with their no commission for the first 30 days, and I was better off paying a little bit of commission on Coinbase Pro or just buying the USDT, because a lot of people don't know this. When you buy USDT together with USD, the commission's a lot less than if you say even bought Bitcoin. It's like a super small commission, and you can pretty much mark it in because there's a lot of liquidity. If you're doing a really big number, then you should limit in. And also the fee, even though it's an ETH token, the fee to send that to KuCoin is actually not very much. Like that might only be, call it $7 to $11 to send like unlimited USDT to KuCoin, versus if you were going to send Wrap Luna, that's going to be 0.2 of a Luna. So, call it 19, 20 bucks, 18, 20 bucks. So it's actually a little bit more efficient to do that. That's my favorite way right now. The Kraken thing, it's probably easier. It's probably a little bit easier, but again, I found it to be a pain to get fiat on there, and their spreads I didn't find them as good. Maybe something else.
And Luna,
Yeah, there we go.
I was going to say the KuCoin fee to transfer out wasn't that expensive at 0.1 Luna, but now that's sort of expensive now. I just noticed that today. But
now
you're
it's cheaper than Coinbase.
Like $10 or whatever.
Coinbase is 0.2.
So what I do is I send USDT over to KuCoin, and then send UST out of KuCoin to my Terra station, and then I buy KuCoin or B Luna on TerraSwap.
So quick question on that. Like I've got too many centralized exchange accounts as it is. And I have a KuCoin account, but I don't have KYC on KuCoin. So if I send USDT from Coinbase to KuCoin, I still don't have to go through all the KYC stuff, right?
Not unless you're doing massive amounts. If you're doing massive amounts,
you can set up the account with your
amount limit.
Right. You set up your account with your email, your phone number. And then you don't have to do KYC unless, like Hutch said, unless you're doing large amounts. But just keep it under 10 grand and you'll be fine.
Okay.
So guys, we're gonna answer or go to two more people, and then we're gonna get into the Luna side of things. Montana, did that answer your question?
Yeah, just real quick. I'm just wondering if someone can help me understand kind of where these juicy LP APRs, APYs are coming from. Like just trying to better understand that, I guess.
Like with the protocols on Terra Luna? Or?
Yeah, I think this all the night. I think this is more of like a basic, and we may get into that. Who knows? I don't know how late it is for Cephii, but I think what we want to do is we probably want to start with the more basic thing for all the noobs out there.
Yeah, and that's kind of what the Luna portion is going to be. It's going to go over all the basic level stuff, and then anybody that has intermediate or expert level questions in regards to the Terra Luna system, and those types of things that we're going to go into that. So it kind of plays into our next part.
So what Montana's really asking is when Alice.
Well, yeah.
Yeah. Soon.
So we're going to go to Eat Your Peas. Welcome to the stage. And then that'll be the last one that we take. And then we're going to jump into the Terra.
Hey, my question is the Terra question regarding the Anchor protocol. So do you want me to hold off on that, or
110%, please?
All right, I got you. Sorry, I joined a little late here. My apologies.
No, it's okay. Thank you so much. And okay, so we're going to get it started. Well, we'll start with you two. So remember, Eat Your Peas and what was the other gentleman's name? Montana. We'll go ahead and give you guys priority whenever we go through the questions for the lunatics. You guys will be first up. So if you guys can help me remember that. Speakers. I'm going to remove you guys from speakers for right now. Give me 1 second. Okay. So let me get into my notes. There we go. So can you provide the VGX community with the origin story of Luna, as well as some background information on Luna's leadership and how that plays into the Anchor protocol?
All right. Well, to my understanding, essentially, Do Kwon and his partner created the ecosystem early on with the intention that this was going to be a algorithmic stablecoin system, which not only creates UST, which is now the sort of primary product of the ecosystem, but also any stablecoin of the world. And the intuition was that stablecoins were the highest volume transacted sort of crypto in the crypto space, and there was not that much being done to decentralize that. And then there needed to be a method whereby stablecoins can be created to a supply of potential, basically infinity, where any amount of UST, any amount of KRT, INT, or any of the other stablecoins could be created. But that had to be a real world value had to be created. And the way that it happens is if you have, let's say, $90 worth of Luna, and you burn that one Luna today, that gives you 90 UST, or any other stable coin of that same pegged dollar value, essentially. Whatever Luna's value is and how much you can produce of that particular stable coin, you can produce it at any point. So that was kind of the initial idea. It was the Terra ecosystem has been built on the Cosmos SDK, or the Tendermint SDK, I should call it, software development kit. And it's the same thing that Cosmos is built on. And when improvements happen to the Cosmos ecosystem, then that tends to be translated over to Terra. And for example, the most recent Columbus 5 upgrade added some of the upgrades and security features of the Cosmos ecosystem into this coin. So each Cosmos chain is a sovereign chain, meaning governance and the principles of that chain are separate for each new coin in the Cosmos ecosystem. So the Terra blockchain is a separate blockchain with a whole set of its own validators, as opposed to, say, like Cosmos Atom or secret networks, SCRT token, and things of that nature. So initially, when Luna UST was first developed, the first concept was not to have this be a layer one DeFi solution. It was meant to be simply an algorithmic stablecoin system. But then as very early in the course, what ended up happening was the decision was made to move to incorporate the Cosmos CosmWasm smart contract system, which already was developed by Tendermint and was already being built out. And this was implemented with the intuition that, well, why don't we create demand for UST and an infrastructure to use Luna and UST without having to rely upon external adoption necessarily. Let's sort of build adoption first. Build it through DeFi, and then build it through, for example, the Chai app in South Korea, where businesses could essentially accept KRT or the Korea token in business transactions like going to the gas station or the bookstore and things of that nature. So they've built out a reasonably robust system with a fair number of users in South Korea. I'm not 100% sure about all the nuances there, but the concept is if you create adoption for the stable coins, then when the stable coins are not pegged perfectly to the native currency, say, for example, if UST is worth 97 cents in a massive sell-off of UST, then you have two driving forces for the restabilization of the peg of UST to the dollar. One of those is the algorithmic nature of the Luna UST system, where Luna essentially is created to take UST off the market in situations like that. And the second major one is, if I know that UST is worth something and I can go buy a bunch of shit with Kato money or whatever with my UST, then if UST drops in its peg, then I'm likely to go and buy it actually, or arbitrage it. And there are professional arbitrage organizations that essentially buy up UST when it dips in price, because people know that it's going to go back up. So therefore, the peg gets maintained. And part of the reason why it's very different from like Tether or Circle is Tether has presumably, let's say they have $70 billion market cap. The presumption would be that they have $70 billion in a bank account, so that if everyone showed up to Tether and said, hey, we want our money back, that money is going to be sitting there waiting to be to pay back the borrower, because you're essentially borrowing Tether and you're parking your collateral, which is your supposed US dollars, over at Tether. This is the theory. And the same concept with Circle. So these have to be ultimately monitored by central regulatory agencies so that they're not just simply printing Tether and there's no money there. So there's a lot of centralization issues that come with having to enforce the existence of the collateral in those systems. The beauty of Luna basically is that you don't actually need to have UST backed by anything. And the intuition there is that without backing, there's nothing to audit, essentially. So Luna can always be converted to UST and vice versa. And the arbitrage opportunities also create a peg stabilization system. And back in May or so, the peg dropped to 93 cents versus the dollar, leading to changes in the ecosystem. And those changes were an increase in reflexivity of the conversion of Luna to UST and vice versa. So ever since then, really, UST has been perhaps the most stable coin on any given day of high volatility, even compared to, say, Tether and Circle, which, by the way, are not perfectly pegged to the dollar either, because they're traded on exchanges. A huge amount of selling or buying pressure of either of those can lead to slight differences like penny, 99 cents, 98 cents, or $1 or $2. So they can lose peg as well. And, one of the things that's happened is more and more arbitrageurs are basically stabilizing between the centralized stable coins and things like UST as well. So anytime these things lose their peg, there's basically a money-making opportunity to be made, and that sort of helps the ecosystem. So this is how the whole thing was sort of come together. And then the big developments over the last year or so that sort of drove Luna up in value, or the ecosystem in value. One was Mirror.finance, which is basically the synthetic stock infrastructure. It's very similar to synthetics, except better in my opinion for a variety of reasons. We don't want to get into that right now. But basically that was a cool little platform that provided some interesting price exposure opportunities and potential growth vectors for the DeFi ecosystem, because really it's the most successful of the stock synthetic platforms so far in DeFi. So I think that's good news. And then the second major thing that was developed was the Anchor protocol, which is the borrowing and lending protocol of the Terra ecosystem. The Anchor protocol essentially functions by using the proof of stake assets such as Luna or bonded Ethereum. You'll find these in the form of BLuna or BETH. And what this does is you provide your collateral there, and you can borrow off of that up to a 45% loan to value ratio, which you get liquidated if your Luna price falls and your loan to value ratio goes above 60%. So on the one hand, you can borrow off your Luna, you can borrow UST, and then you can buy whatever the heck you want with that UST. You can send it out of platform, you could send it to your, ultimately get it back to your bank account and go buy a house with it. You can do whatever the hell you want with it. You can buy more crypto with it. You can buy more Luna with it. You can send it to KuCoin and buy a bunch of neat other coins there pretty easily. So a lot of different things you can do with UST once you borrow it. The other thing is the collateral that basically sits in the Anchor system, the yields from that go to the yield reserve in Anchor. And that allows you to then park your UST there in the earn section. So if anyone here has not used Anchor protocol, basically you can go to the web dApp at, I think it's anchor.protocol if I'm not mistaken, or anchorprotocol.com. I don't remember which one.
Anchorprotocol.com.
Yeah, anchorprotocol.com. I should know this.
Yeah, there's the docs at anchorprotocol.com if anybody wants to read what he's talking about in detail. And then if you want to use the protocol, it's app.anchorprotocol.com.
Yeah, app.anchorprotocol.com is where you want to go to kind of play with it and see. And even before you hook up a Terra Station wallet to it, you can just see what it offers. But the basic, most obvious thing that I found when I first was sort of on this journey to figure out what I'm going to do is I was on my stablecoin journey of trying to figure out the highest yield earning place for stablecoins. And the highest yield earning place for stablecoins has been at a base level was Anchor Protocol. And the base yield is somewhere between 19 to 20%. And that's fueled, like I said, by borrowers who are parking Ethereum and Luna in the system. And that yield is going to fill a yield reserve to pay out these wild yields on stablecoins. So the nice thing about the what I mentioned before, the stock exposure is you can get, that's one type of price exposure you can get. The second type of price exposure you can get is the ability to get high yield on your, UST up to 19 to 20%, which is phenomenal. The third thing you get is the immediate ability to take your Luna and borrow off of it, which is extraordinarily powerful. I've been using that functionality pretty much all year to very good effect. And as long as you're careful with it and you have a strategy, and I think Lunanomics did a talk today about it, and I've talked a lot about this, it's been extraordinarily lucrative. So I'll give you an example of how I use the system today, precisely so you get an understanding of what this means. So I've got a lot of Luna. I've got some of it staked. I've got some of it doing various things, but I have about a third of it that I borrow off of. And I keep my loan to value ratio really, really conservative. I'm usually somewhere around 30 to 40%, something like that, so that I don't suffer from liquidations that easily if Luna's price were to fall suddenly like it did today. So what I did today was I'm what am I going to do with my Anchor borrow power? Well, what I usually do is the deeper a coin price falls, the more I get of it. And to me, there is no such thing as a top, and there's no such thing as a bottom. There's always just price volatility. Things go up, they go down, whatever, who cares? You just need to figure out what you're going to do when that happens. So when the price of Luna today went down, so I think it was down to $94, $95, I started by getting a little bit of Anchor borrow power, and I borrowed a little bit of UST, and actually bought more Luna with it. And what I did with that Luna is I sent it to, let's not get into what I did with it. The bottom line is I got Luna cheaper at that moment. Okay, that's the first step. Then as price fell further, because I tend to preserve my borrowing power for when the price of coins are down, because I don't want to buy high and sell low or get liquidated. I want to buy personally near bottoms where my liquidation risk is going to be nominal. So I went and basically bought a shit ton of Luna, like maybe a couple hours ago while I was on a road trip. And, I bought a lot more at like right around that 89 to 90 range. And, it's up like, I think 3% already or something. There's already some, but there's other neat things you can do. Like I can take my Luna and I can arbitrage it. I can convert it to bonded Luna and get like 1 to 2% extra. And then there's a cycle of burning I can do with my bonded Luna. And we don't need to get into all that in great depth. But the bottom line is I'm able to get a lot of Luna for fairly inexpensive on the borrow without necessarily having to send new cash into the system. Now, I did, I did take some crap that I had in the green on Voyager that I had sold last week, and I used some of that to buy some more Luna there. I had some, I wanted to put some new cash into the system, so I did connect, because I have my bank account connected to Coinbase, for example, and I went ahead and got some wrap Luna there as well that I can transfer over later once ACH and all that is cleared. But I just wanted mega exposure to this drop because I think I just want more Luna, period. So and then every month that goes by, I might have more income coming. So I don't have it all necessarily in the ecosystem. I may want to invest further, right? So I might use things like Coinbase to get some at a spot notice when, and that kind of thing. But I tend not to go too crazy on borrow, and that's just because the magnitude of size of how much money I'm playing with is fairly substantial. And I don't want to get wrecked for any obvious reason. My basic number one rule in crypto is never lose money ever. So my track record is 100% to date. Never lost any money in anything for a good solid 30 years, I think now, in any investment of any kind. So you can only imagine how much I can make with never losing anything ever. That there is a method to that madness, and that's sort of my general philosophy in investing is that. And so that's kind of how I use my borrowing power today. And I think it's one of the most important sort of base features of a crypto, in a sense, is the ability to borrow off it is extremely powerful. And if you haven't been exposed to that, it's a much safer way to obtain some leverage without, say, for example, going and taking doing margin on centralized exchanges or taking perpetuals, 2 and 3x perpetuals. You can do all those sorts of shenanigans too if you'd like, but in this case, it's very difficult for me to be liquidated unless I really degen out like crazy. It's so relatively safe. I don't have to have stop losses and such and waste all the money on all that nonsense. And I don't have to spend a bunch of wasted money in fees and mistakes and technical analysis and a bunch of other shenanigans and bullshit that saves me a lot of time. So I think when I discovered the true power of Anchor Protocol, I'm like, holy shit, this is just a money printer from, this is just a money printer, basically is what it is. And I think the Terra ecosystem has a lot of cool capabilities within it for price exposure that I tend to love and have learned how to use pretty effectively. But yeah, go ahead. Sorry, question.
Yeah, no, I just wanted to go a little bit deeper into, for someone new looking, and this kind of paid into the gentleman's question, for someone new looking to get into DeFi from a centralized platform such as Voyager, can you give us the steps on how to get started?
What's that now? So steps to get started from where?
For just taking off of a centralized platform and trying to dabble into Anchor Protocol, can you walk us through those steps of the different wallets and things that you need to set up?
Yeah, the simplest thing to do would be, so if you're on your Chrome browser or your Brave browser, essentially Chromium browsers, you can get the Terra Station extension installed And from there, you do all of your transactions. You can do the same thing on your phone with the TerraStation mobile app on Android App Store and the Apple App Store, so that's TerraStation. That works quite effectively. There are occasional sites and dApps that you can't use on mobile, so it tends to be helpful to have both. Once you create a wallet and get a seed phrase, you can enter that seed phrase onto any hot wallet, either on desktop or phone or both, and you can use those whenever you want. One thing I generally recommend people not do if you're new to wallets is do not screenshot your seed phrase. Make sure that you have either written that down or put it into some secure, encrypted password app or something like that, where you're not, and you shouldn't really even do a copy paste on those, just in case you have in case you have a virus on your system that essentially steals your clipboard information, for example. So really be careful with seed phrases. But outside of that, it's pretty easy to use the TerraStation wallet, and actually has one of the best native wallets in all of DeFi, in my opinion. It is actually one of the easiest DeFi ecosystems to use as far as Terra is concerned. So really my strongest recommendation is anybody new to DeFi, the first DeFi setup you probably want to learn is Terra, more so than all the others, because it is actually one of the most immediately useful, both in yields, borrowing capacity, and all the stuff we mentioned. But it also has one of the best user interfaces out there, and they continue to improve it. In fact, there are some updates today, I believe, on dark mode and this and that. So a lot of really nice features on the native wallet, and it's really pretty easy to use. And the way you use it, once you get money to your wallet address from various centralized exchanges like we talked about, you're on the Terra blockchain. So you want native Terra assets, not the wrapped Ethereum assets like wrapped Luna or wrapped UST. You need to be on the native Terra blockchain to participate in all the decentralized applications. And what a decentralized application is, long story short, is basically a website. You'll have a little wallet connect button on the top right corner of most of these, and that'll interact with your TerraStation phone app or with your Chrome extension, and it will ask you to allow that website to interact with your wallet. The only security thing to keep in mind is if you're new to this, is it's a good idea to find the definitely real websites, not go to just Google and just sort of like type Anchor Protocol, because it might take you to the right place, but who knows where you go on Google, and you don't want to go to like a fake site where they connect to your wallet and you're interacting with something that's not real. So what you want to do is basically a good way, since all of you are on Twitter, is follow the Twitter handles of the various protocols. And then what that allows you to do is basically just get the link off the Twitter profile, and then you're at the legit place. So Anchor Protocol or Mirror Finance or whatever. And then I just bookmark all of those in my my Brave bookmarks folder or whatever, and then I have for future use. So and then you just jump around between the different apps and dApps by just using your bookmarks. And once you've connected your wallet, once those dApps, you don't have to keep doing it over and over again. You can disconnect if you want, but there's no real obvious reason to do so.
So guys, I have a whole bunch of people raising their hands. Please reserve questions for the end. We're going to get through this, and we're going to allow you guys to ask any questions. I know that the VGX community is chomping at the bit right now to learn more about this. And I'm pretty sure your questions will get answered. So just please remain patient. There's a reason why we're not allowing anybody to come up here right now. So just please write down your question, and we'll get into it.
Oh, so, I might add briefly, there's probably some, besides what I've said so far, which are very important catalysts for why Luna has done as well as it has. I think it's extremely important to sort of understand a little bit of the tokenomics of Luna, sort of like we talked about VGX a bit. The Luna tokenomics, as long as stablecoins are being minted, by the way, Luna essentially is functionally deflationary, and it's deflationary at a level unseen in the history of the human race, as far as I'm concerned. Like, there is no asset with this type of demand, where the product is literally money, and the effect of printing that money is actually destroying more and more of the supply of Luna. And it is currently right now probably one of the most aggressively non-Ponzi deflationary tokenomics schemes in the world. And this last year, or this last week actually, we just reached the milestone of 10 billion UST created, and that's driven some of the price appreciation of Luna. And you might think, hey, you know what? It's a top 10, market cap coin. It can't possibly go up anymore. Look at all the rest of the coins. They just sort of stall for a while, and I have to wait 20 years for this thing to go up. Not necessarily. Like if Do Kwon, the founder's intuition, is correct, the intuition is that in the next year or two, you should see another logarithmic expansion of the UST supply to probably another 10x to $100 billion worth of UST, which implies that you have to burn $90 billion dollars worth of Luna. Luna's current market cap is only $35 billion. So essentially what you create is an inelastic price squeeze with essentially Luna's price is asymptotic to infinity, whereas the supply of stablecoins supply is asymptotic to infinity, meaning Luna's supply drops asymptotic to zero, which means you'll get lower and lower amounts of Luna. And what'll happen is you can print more and more UST from it because that Luna is worth more, right? So it's not going to go all the way to, like people say, well, if the current burn rate, won't it go to zero? No, it can't go to zero because that would imply that you've printed infinite money, which is impossible. So, but it creates a tokenomics scheme that is like, I think it's calculated to be like 100x more deflationary than Ethereum is right now. So you can get like just extraordinarily high price growth without the market cap necessarily being very high. You can actually burn so much of the coin, let's say 2/3 more of the coin, and the market cap can actually fall while the price is rising. So that's why the market cap is not as high, even though the TVL is very high. The total value locked is second only to Ethereum now. I think the Binance Smart Chain is right after it. What the store, or I think it may be number 3 right now, but whatever. The point is, the reason why the market cap doesn't rise to like surpass Cardano or XRP just yet is because really the market cap is the combination right now of UST's 10 billion and the 30 billion or whatever of Luna. So that would be the true total market cap of the ecosystem. It's sort of like a binary coin, so to speak. And that's a better way to look at it. And the tokenomics are some of the best in the world, quite literally. And there is, in my view, like, again, not a financial advice type of thing, but my intuition is that the target price of hitting like $1,000 or another 10x from here would be very, very feasible within the coming year. So I don't foresee this as something I'm going to have to wait a decade for it to 10x necessarily. I think the next couple of years or several years are going to be crazy. And then that doesn't include the fact that you can use your Luna for lots of cool shit. There's a lot of interesting things happening with Luna itself, creating holding pressure. The ability to borrow off of it is one of the most extraordinarily important pieces of the puzzle, which is why I collect more Luna with every possible chance I get, because I know I can buy other crap with my Luna. I can't necessarily take other crap and buy Luna with it, right? But I can buy almost anything I want with Luna, including real world goods. So that's a strong motivator for me to hold a lot of it.
Should we talk about that a little bit? Because I know, especially with newbies, when you hear the word borrow, it's just like you see red, and it's not necessarily like that. And I know you talked about Anchor, but I think it's worth mentioning, and at least when I first heard about it, you could borrow and actually come out ahead of the game. So, and I know that just sends alarm bells ringing with everybody that's new to the whole Luna ecosystem. But I came to peace with it.
By the way, Hutch, I'm not the type of person that was really borrowing at all before this.
There you go.
I wasn't I was just using income from my work, jobs, whatever, for most of my investing for most of my life. So it wasn't like I was sitting around leveraging before this, because traditional leverage actually is much more about, gambling your technical prowess or whatever, your TA astrology than it is anything else. But so there's like educated gambling going on there in theory. And a lot of people just lose money doing it, honestly. Like, if you look at all the liquidations and whatnot. So to me, the ability to borrow relatively safely with reasonable sums of money and be able to sort of like build my positions, especially as a dip buying type of strategy, has been extraordinarily powerful. Like, you can't even imagine. Like, if I just unleashed my entire borrow power now, like, I can buy a lot of shit. It's kind of funny, to the point where, like, I don't need a bank anymore because I have enough collateral. And when you have a hyper deflationary asset that's growing like 10x every few years or whatever, you have such extraordinary borrowing power that you don't get out of your house or some other type of asset. Because, like, in any other asset that you borrow off of in some point in the future, you got to go through a central agency. They got to check how much collateral you have, and you got to pay them, the various levels of interest you don't want to pay them and whatever, right? Whereas with this, I can get instantaneous access anytime I want, anywhere in the world I want, without having to ask permission from anybody. And that's an extremely liberating, powerful feature of DeFi, but especially
for $1.65. For $1.65, right?
Yeah, right. Like the transaction fees on Terra are actually not in Luna; they're in UST. You can actually do everything native UST, so you don't actually even have to waste your collateral asset to pay the fees, unlike Ethereum and other networks.
And that's what I heard when you were going into it today, that I think is probably the key point, and it kind of took me a while before it hit, is with other crypto or other assets, it's a single-use asset. I want to buy Luna, so I can't do X. I have to sell X so I can buy Luna. I have to deleverage from this to do this. And Luna is an and crypto, meaning if you have enough of it, or that's your base, and that's what it turned into for me, and I don't have as deep of pockets, and so I use the anchor borrow. I don't want to call it safe because you can get liquidated, but if you're strategic and responsible about how you use it, you can manage not getting liquidated. There was a very big dip on December 3rd, and a lot of people got liquidated, and I had to do some scrambling and some juggling, but I was able to manage my not getting liquidated, because along the way I realized this is something I did want to ape into, and I didn't have quite as much dry powder as I wanted, but since I had aped into enough already, I was able to borrow against it at a favorable rate. And just so everybody knows, because I think that's the next question that everybody wants to ask, the rate to borrow has been somewhere between, call it 18 and 22%, which is like, but they subsidize you with the anchor token almost as much, to where on average you're between, call it positive 1 to 2% to negative 1 to 2%. And it's algorithmic, so it's gone back and forth, but I'm pretty close to even with the amount of anchor token. The next question that people usually ask is, how is that going to go on forever? Well, it's not, but it's going on now. And at some point when it doesn't go on forever, there's still, because you're parking Luna, that does provide a staking yield, and you have to park more than you plan to borrow. It actually is a sustainable model long term, but it probably won't be this good as it is now. So because of that,
and keep in mind, like, you don't have to borrow. Like, this is just one of the very powerful features of this system. The tokenomics of Luna are such that the staking yield itself right now is about 8%-ish, maybe 9%. And about 40% of that is paid out to you in, I think 60% is paid out in UST or other stable coins, and about 40% is paid out in Luna. So the Luna portion of the yield is scalable. The yield on UST is not scalable, but because you're getting paid in UST, when you have a dip like today, when I have my Luna staked in an auto compounder like StaterLabs.com, I'm actually buying the dip on all my staked coins too, because the UST is going to buy more Luna than it would have if Luna was at $100. The other weird thing is, because anytime Luna is at a lower price, like it went from $100 to like $90 today, at a lower price, more Luna is burned to print any fixed amount of UST. So you want actually Luna's price to drop to burn more of it, because then the future growth will be even more explosive. I know it's very weird, but like it is actually a good thing when prices drop, and it not only gives you an opportunity to buy more, but it almost certainly means massive price explosion later.
So,
And once you go ahead.
I was going to say, we have a lot of requests to speak, guys. Once again, we're going to hold off to the end of this, and then we'll go ahead and answer any questions that you guys have. The requests are just piling up like crazy.
Sure. I just want to hit on that point, because it really took me a while to think of this differently than any other crypto. And because of that phenomena that Sefi was just talking about, Luna is really a coiled spring. If the price goes down, you have to burn more of it to provide UST for loads and loads of people who are searching for the best stablecoin yield, and they're going to find out it's on Anchor Protocol. Well, and that stablecoin yield that has been 18 to 19% is coming from borrowers. And so when you learn about the degen strategies, they call it the degen strategies, whether you do it or not, or whatever level of risk you're comfortable with, when you realize you have the capability to do that, you can borrow at a very low LTV and buy the dip without having to come out of pocket with extra cash flow. And a lot of people did that. A lot of people that I onboarded called me and said, hey, I know you can do this. Can you show me how to do it again? So I did a video with some guys where I just showed them how to do it in real time, and they were able to buy the dip. They kind of felt like they missed out, and now it was back in the low 90s, high 80s, and we bought the dip. And you can't do that with every crypto. And going back to what Sefi was saying about the relationship between UST and Luna being tied to the hip, people love the fact that even if there's a complete equilibrium between sellers and buyers, the fact that more and more people are going to be buying UST, and they're more so going to be doing it when Bitcoin and Ether and everything else is falling, they're going to flock to stable coins. Even if there's the exact same amount of Luna sellers and buyers, that makes Luna go up because more and more Luna is getting burned. So there's a couple reasons that make it a coiled spring. And once you figure that out and everybody has to do their own research, you realize, holy crap, prices are relevant. It doesn't matter that I got some of this at 30 or 40 or 50 or whatever. I'm going to want a lot of it because it's probably going to go a lot higher.
As an example, I've been buying Luna since like around, I think 16, then 12, then $5, then everywhere in between from here and there. But like there is no end to your ability to buy it, because ultimately as the price of Luna goes up, your borrowing power goes up along with it. So now, like, not only do I have more Luna, but I have a whole bunch of other shit too, because I'm borrowing off of that and, buying other things that went up like crazy. So you do get that benefit of the leverage, on tap when you feel like it. And I think there's a cautious way to use all of that, and that's a whole other discussion. But it's been extraordinarily powerful in other words, even if I sold what I needed to right now, I could easily pay off my borrow, because even though the borrow interest rate might be 2%, I made like 400x on, or like, I'm sorry, 400% gain on what I borrowed. So therefore I'm fine, right? Like there's not a reason to rush off and pay that off because I don't need to, especially when you get Luna, because now you can provide that Luna back as collateral if you want to. And now your loan to value ratio falls even more. So you don't even have to pay it. You don't even have to sell your Luna. You can just leave it there.
And TradFi had a great saying, are you really in debt if you have a corresponding asset over here in another pocket that's working for you, that if you wanted to, you could liquidate and pay off that debt at any moment? If that's the case, if in one pocket you have a loan and in the other pocket you have an asset that's producing for you, that at any moment you can wipe out that debt. Are you really in debt?
Yeah, like I could literally unwind all my debt, like, getting off this phone call and spend 15 minutes on, various places that I have my crap. And unlike, let's say, for example, real estate, where I'd have to, like, if I borrowed to buy like a rental property and I rented it out, right, that's a whole nother ball of wax. It's like you're not liquid essentially. Whereas here I'm extraordinarily liquid. And some of the things that I diversify into using that money is I actually diversify into other things that earn lots of yield. So I might get like 10% yield on Atom, or whatever, or on Polkadot, or what other coins, and then that yield can theoretically service my debt if I wanted it to, and I still get exposure to the price action of those things if I wanted them, right? So there's a lot of interesting permutations to this once you sort of play this out like a video game.
So that's going to move me on to my next question is, there's so many things that you had just mentioned that's involved with Luna's or Terra Luna's ecosystem. But what differentiates Luna from its competitors in the DeFi space? And in your opinions, how do you see Luna maintaining this type of market dominance and competitive advantage heading into 2022? Because as you know, there's going to be a lot of people trying to emulate that. So what's your thoughts on that?
Well, the most obvious thing is that unlike other major DeFi platforms out there today, the primary product of the Luna ecosystem is to produce UST and UST adoption. And as such, it is one of the only DeFi coins with a substantially deflationary mechanism outside of, let's say, the current Ethereum iteration. And the yield that comes, I forgot to mention this earlier, we're one of the few systems with a non-inflationary yield. So the yield that we get right now is a mixture of seigniorage from the Luna UST burns and transactions on the network. So we're not creating token inflation with the yield like most other coins have, and that's extremely powerful. So really, as far as tokenomics are concerned, it is the actual best L1 tokenomics in all of DeFi and all of crypto, period. There is no competitor. There is nothing even close, and there's nothing even close that's even gonna, it's not gonna be that easy to develop a popular stable coin. There's some other things that are happening, like Vader and a few other tokens that are being developed, reserve rights and things like that. So there's some things out there, but some of them are going to take a long time to develop, and you can certainly speculate in those things. But from a purely deflationary mechanism with a fully functional layer one, you just don't have. There's just nothing that beats Terra Luna at this point. So I think
Bing is a great search engine. Isn't Bing an awesome search engine?
Yeah, no, but what I think is going to happen is my sense is that compared to so in the top 10, I think the order of market cap is going to end up being Bitcoin number 1, Ethereum number 2, Terra number 3. What Terra does, and if you compare it to, say, for example, anything else in the top 10, the only reason it's wouldn't be above Ethereum is only because it's Ethereum has been there for longer. But from the perspective of potential, if some of the developments on Terra, like the Forex ecosystem, that Vertex protocol, and some of the other big things that are coming out, it actually is the most immediate and most obvious competitor to actually beat the market cap of Ethereum, in my opinion. It's not to say that you couldn't necessarily copy some of the features of Terra on other things or other blockchains, but from the start, it has the right tokenomics. It's very difficult to take an existing tokenomic and infrastructure and convert that to a totally new tokenomic and infrastructure for the existing layer 1 players. It's just really not that easy to do. There's lots of reasons for that.
Not only that, but we've heard from the AMAs that there's a huge, they ask me anything for the different protocols, there's a massive shortage of developers and auditors. So Terra has a ton of stuff in the pipeline just waiting to be launched, and it's bottlenecked right there from developers and auditors. So somebody's going to come from out of left field, and they're going to just clone a bunch of developers, and it's just not going to happen.
There's also the fact that just TFL's development team has just been fucking badass. The reality is that not many people have been able to duplicate their execution speed. So, folks that invested in them, early Coinbase Ventures and Galaxy Digital, and I think even Vlad from Robinhood, I think, was an early seed investor for them. All of them saw something in the mixture of the team and the their potential, but really just their consistent ability to execute and do so on this scale and with this velocity. Just think about how fast like the rise of Luna has been. And there are reasons why Solana has done well and some other chains have done well, but I think in the aggregate, like when people ask me, hey, Solana's doing really well, should I go buy that? And I'm like, well, not if you want the superior tokenomics on the planet. Like, you can be involved in those chains too. That's fine. But to me, like right now, Luna is essentially the apex asset of all time. Like there's no comparison. There's no stock on the market. There's no like currency. There's no precious metal. There's literally nothing with this sort of like growth potential in my view. It's ridiculous.
And that's a good point too, and that's something that Obi has spoken about. Is the best minds in the whole space reside on the Terra ecosystem. There's none better. And I see somebody that I highly respect. So hearing that from him, that resides with me. Can you talk a little bit about that? So let me rephrase this. So if I'm a new investor getting into Luna and I want to dabble into some of these protocols, could you list 3 things at a very basic level to where I can get involved into the ecosystem, whether it's the borrowing aspect or getting 14% staking on my Luna or anything else that's super easy from a price arbitrage standpoint?
Yeah, the first most easiest thing like that I got some of my family members who just simply want to park some money and forget it is, I think, auto compounding, which means you take the yield off of your Luna and it buys you more Luna, and it just keeps doing that 24/7. On Stater protocol, I think is a very effective thing for the average person. And like a cousin of mine, I was just at their house out of town today, and just driving back today from there, and he's like, holy shit, look how much Luna I got, just because it keeps auto compounding. And so it's actually a fairly nice reinvestment vehicle, because you're basically reinvesting non-inflationary yields on a hyper-deflationary asset at a rate of 8%. Sweet God almighty. I mean, that's like, if I had that back when I was a kid, I'd own half this country by now. The reality is that that's a very powerful mechanism that just can't be understated just by itself. Even if you don't do any borrowing, you don't do any of this shit. If you go to staterlabs.com. Yeah, go ahead.
I was just going to say, before you moved on, Crypto Money Life brings up a great point. Like, if you're not going to do any of the degen stuff, when you stake, whether it's on Stater Labs, which is the place that Sefi was talking about where they'll auto compound you, or you just stake and you have to kind of scrape all your earnings on your own and reinvest them. When you stake, there's a 21-day lockup period, and that kind of forces you to have diamond hands. And he said that saved him many times from, that dip on December 3rd. Luna was at 70-something. In the middle of the night, it went to like 51. And then when people woke up, it was back to 70-something. So the people that were asleep or the people that were staking, they had forced diamond hands versus I know a lot of people that got out, whether they got liquidated from big borrowing or they just got scared and they sold. Go ahead.
The right answer is that people that aren't used to trading or like have their jobs and other things to do and don't want to like mess with all this nonsense is essentially you auto compound to infinity and just let the thing ride and just don't even look at it for a few years. You'll do really, really well. This was true in most crypto with reasonable tokenomics. So, or for that matter, most tech stocks and this and that. Like you get shaken out by watching your portfolio rise and fall ridiculous amounts of money, and then you're like, oh my god, I could have bought an X with this and I could have got a that with that, and I wish I sold here, and next time, you know what, I'm going to remember to sell high and I'm going to buy low. And what ends up happening is you screw the whole thing up at some point or the other, and you just waste a bunch of capital. So one psychological trick is just to measure your wealth in Luna or measure your wealth in whatever asset you're trying to acquire. We call that kind of accumulation psychology, as opposed to measuring your wealth, in what the value of Apple stock is today. You just measure your wealth in how much Apple stock shares you have. And that's a very different mindset. And once you sort of switch to that, you can figure out, oh, wait a minute, I don't have to worry about what the spot price is. I just need to figure out how to get more of that particular asset. And that's where that's when the video game really begins. So, but yeah, the question, but for the comment about like what other sort of things that are available, certainly the bookmarks would be Anchor Protocol. A really, really big thing coming out soon, besides Stater Protocol. Stater Labs is really useful.
Another ecosystem feature that's going to be amazing that's coming very soon is Prism. And I don't even want to get into what that all does right now, because it's a whole entire discussion into itself. But it's really interesting, revolutionary DeFi tactics of splitting Luna into the yield component and the principal component, which has a lot of useful functions depending on what your goals are. So just another type of price exposure is the best way to describe it. Then other things that are coming are Mars protocol, such as where Mars allows you to have under collateralized lending. So eventually you develop like a reputation, and then you can borrow more off your money than just what your LTV would be on Anchor, for example, using not only Luna, but potentially other assets as collateral. Other important things. So really anything that you think of in traditional finance is coming in some form or fashion. You have, really exhaustive NFT platforms like Andromeda coming, which are going to allow possibly like legal documents and other types of structures to be created in smart contracts. Like for example, I don't know,
you want to talk about Alice?
Well, Alice is interesting. That's coming out hopefully in the next month or so. I think their main thing that's been holding everybody back has been the Visa MasterCard network for debit cards. But what Alice is going to be is yet another sort of neobank option where you can basically connect your bank account as a Western customer at least, and move money over and immediately start earning the Anchor yield, which is what I was hoping Voyager would ultimately do as well. And what you end up getting is you get the 19.5%, 20% APY without the complications of figuring out how to use a DeFi wallet. The importance of some of those on-ramps for normies, essentially, or for that matter, for those of us who just want to use our yield and just spend it on a debit card, these are going to be really, really big. Just to get a feeling for like the type of infrastructure that's being built, go to you might want to jot down Kado money, KADO money, and look at their website and what you can buy with UST today. And I think you'll be impressed. You can buy a lot of shit on there, like Apple Watches and products, and you can buy like Dove soap.
Amazon, right?
Yeah, Amazon. It's like a drop shipping type of deal.
C5, can I chime in just because there's a lot of really new folks and we're getting pretty deep into stuff that hasn't launched yet?
Oh yeah, sure. And Kado, by the way, is available now, so you can check that out. But I just reference that as a way to use your money as actual money. In other words.
Yeah. Alice will be huge when it eventually launches.
You're sounding very dark side.
No, I just because the majority of the folks on here, at least from the Voyager side, are probably not comprehending some of those features.
Sound-wise, you sound more like Darth Vader than Obi.
Is that any better?
Yeah, it is.
Okay. I was just saying, we're getting pretty deep into the future roadmap of dApps on the ecosystem. I was just going to throw out there, if the set it and forget it stuff, for making it easy, Stater Labs is a good one. White Whale would be another good one. And then can you touch on Apollo and Spec? Because those are smart indexes. Those are smart contract, auto, take all the fees and compounding out of the complication out of things and just plop some funds in and wait.
That's a good idea.
Well, I think that gets to what Montano was asking about earlier, which is other opportunities in DeFi, like being liquidity providers. And what he's talking about, Apollo and Spectrum right now, their core services are the ability to sort of auto compound your rewards from like DeFi liquidity provider positions. Probably for a lot of folks here, that might be getting into the advanced stuff for probably a bigger discussion, but Spectrum Protocol and Apollo DAO, APOLLO DAO, are the things he's referencing. But basically, within these ecosystems, you're going to have more and more types of automations to sort of like do things for you with less clicks. So you kind of set and forget and make money doing different things. Montano was asking earlier about how do I participate like in liquidity provider activity, which would be where I'm providing assets for trading purposes, and I can make money off the yield from transactions of those things. The places to look at for those activities are Astroport.fi, Astroport, and also TerraSwap.io. Those are the two DEXs right now, or the decentralized exchanges on Terra. TerraSwap, most of the fees are generated through just trading activity, and those are given back to the liquidity pool provider with the price of the LP token rising. And that's a whole nother sort of like lecture or such to how to use the LPs.
Way to explain it to my normies simply. So if we all know that market makers make a lot of money, but in order to go work on Wall Street, you have to go to an Ivy League school. You have to hopefully get a job at Goldman Sachs or something like that. And then you got to go be an intern for a while on Wall Street. And then eventually someday you get to go be a market maker. And when you're a market maker, it's kind of like a bookie. You don't get to pick a side. So if you want to trade Apple, or you're going to be a market maker for Apple, you have to take either side. If people want to sell Apple, you have to have cash to give them cash. If they want to buy Apple, you have to have Apple. So when they give you your cash, you give them the Apple. So on decentralized exchanges, especially one as robust as we have on the Terra ecosystem, there's all kinds of the different protocol tokens, or there's the native Luna, and there's lots of variations of Luna. Well, regardless of what you're into, you can take the tokens that you already have and you can pair them with UST, and you can provide however much liquidity you want. And by doing so, it's less about an appreciation play of those, whatever tokens you put in that liquidity pool or yield farm, and it's more in just you sharing your pro rata cut of the fees. And you have to be bullish on what you're putting in there because you want it to go up. If it goes down, you're going to end up with less money usually. If it goes up, you're going to end up with maybe less money that you would have had that if you just had the token. But some of the market making fees that you can earn are great. And so it's just another opportunity. And I think we're in a world that's starved for yield. And a lot of people that are going to come into Terra aren't so much worried about appreciation. They just want to have yield. And there's lots of ways to do that. And what Obi was talking about, Spectrum and Apollo, they'll kind of auto compound all that for you, just like Stater Labs will do for your staking. So if you just want to set it and forget it, and you have a lot of choices, and that could be a call into itself. But the market maker thing seems to resonate with people as far as just understanding, like, how am I earning that much yield? This is crazy. It's actually not. Market makers make a lot of money. So if you cut out those suits on Wall Street, and we have a decentralized system, and everybody gets their opportunity to provide liquidity, you just get your pro rata cut, whatever that is.
That's a great explanation. Awesome.
That is a phenomenal explanation. That was so on point.
I do want to touch on one thing that I do as well with my anchor borrows that is unique for us in the United States, because we don't get the opportunity to participate in ICOs anymore because of the SEC. So, one thing that came out is called Pylon Protocol, and they have a gateway where if you want to take your UST and lock it up like a safe certificate of deposit or a bond, you can essentially provide UST dollars in exchange for some early launch, early access to new protocol tokens that are launching. And then at the end of the term, when your bond or CD is over, let's say, your principal is returned to you. So it's a way to cheaply and easily essentially acquire free crypto.
Yeah, so basically lots and lots of sort of ways to make a buck within these ecosystems is I think what we're describing. And you sort of go down the rabbit hole and you sort of like play one by one. And I think the most obvious use of a person's money right now is in Luna related activities, UST related activities, and then the borrow capacity and the staking yield earning capacity of Luna. I think those are the key fundamentals, and then everything else sort of comes after that if you're really into it. You don't need to do all of those things if it sounds complicated, but certainly a lot of people do, and there may be, and all those things have, by the way, all sorts of various sort of like price exposure risks and such. So I wouldn't go nuts with most of those things if you don't know what you're doing. I would go really light and sort of like play around a little bit and sort of see what things do so that you don't get wrecked doing something silly. Because it's not like those things don't have risks.
Well, and most of us wish we would have just gotten more Luna when it went from 50 to 70 to 100. Most of us just wish that played around with all these cool little toys and gadgets and ways to make money. We wish we would have just focused on Luna. And so it's funny, it's everything reverts to the mean. Most of the core lunatics are saying, look, we're still really early. Let's just stack the hell out of Luna. And then when we get the crazy pump, let's do all this fun stuff.
So, and that plays into my next question, actually. So, obviously not financial advice, but from the outside looking in, Luna is up to around 26,000% for the year. What would you tell a potential new investor that might shy away from jumping into Luna based on the huge run-up this year?
Well, I think you have to make you have to make some decisions for yourself as far as like how much time you have to wait. What are you looking for, growth or stability, and a lot of other things. So you can always make an argument that some small cap token that's out there is going to do like 1,000x, and you can basically get potentially better outcomes investing in other things. That will always be the case in crypto. It'll be always the case in stocks and everything else. There is always higher risk in a sense with earlier things, and you're paying for that risk with uncertainty. You're paying for uncertainty, and the price is lower because of those uncertainty risks. The more robust any ecosystem becomes, the more sort of like time tested it becomes. You pay for that. It's more expensive in the price of a coin, whether it's Bitcoin or whatever, right? So, things become more of a store of value as the price goes up because their price appreciation might be limited. The good news with Luna is that it's still, quote unquote, very early. It's pretty cliched to say that, but realize it's only been like a year and a half or whatever where it's really been doing its thing. And there's a tremendous amount of major world-changing sort of apparatuses coming to the ecosystem. So I look at these things as a multi-year thing. I try not to do kind of like too many get-rich-quick shenanigans. I'm successful because I have a strategy that works long-term. And I think when it comes to buying something, I have basically a method, and that the higher something goes, the less I'm going to put in near a top. If I'm, buy $100 of something at the top and it goes down 10%, I'll buy, $200 worth. So if it goes down another 10%, I might get $400 worth. So I have sort of a strategy that might go something like that. Or if it's not something that's that volatile anymore, I might just simply do a dollar cost average personally and say, you know what, I'm going to periodically see some opportunities and throw some, what I think I intend to invest in this. I'm going to sort of allocate that, make some decisions of how much that's going to be, how long I want to wait, assuming that, and what am I going to do with the asset? And the interesting thing about Luna is that since there's so much cool shit you can do with your Luna, it's not simply a matter of asking, okay, like, how am I going to cash out of this thing? Like, selling your Luna is completely pointless because I can buy anything by borrowing off of it. Why would I want to sell it ever? So that's one of the reasons why Luna keeps going up in value, because there's so many reasons that you want to hold it as opposed to either to sell it or use it for some transaction value. And that's something to keep in mind. So like, to me, like one of my, cousins, like, should I just get more Luna now? I have this UST I had parked here and I'm earning 20% APY. I'm like, okay, well, do you need that UST now? And he's like, not really. So I said, well, go ahead. And he's like, well, you think I should just buy a bunch of Luna with it? I was like, well, watch the market. We kind of went up a lot this last couple of weeks, see what happens. And, probably when I get off this phone call, I'll just tell him, just go dump all that in Luna right now. Because really he's looking for longer term price appreciation. He's not too worried about the stability of his stash. And he'd rather have the appreciation than having it just sit there earning 20% yield on Anchor.
I like to take my emotions out of it. And when I see it starts dropping, I like to stagger limit orders. And there's ways to do that off chain and centralized exchanges if you have money that you can dollar cost average into. And there's ways to do it on chain. So I could safely borrow a little bit where it shows me my estimated liquidation price. And right now I'm down at like 55 and Luna's at 91. And so I was actually below 55 and I took some up. I kicked it up just so I could go ahead and take advantage of this dip. But rather than just go one foul swoop, I kind of look at the chart and kind of just pick a few levels. I'm not getting all TA crazy, but I just kind of pick a few consolidation levels, and I'll just stagger some limit orders. And the ones that get filled, great. And I usually market in for just a little bit. So to make sure I get some in case it just bounces right away, I'll market in for a little bit and just kind of stair-step stagger some little limit orders all the way down. And the ones that get filled, great. And the ones I don't, I either put in anchor earned or 19% or I pay down my loan.
What's your thoughts on that, Obi?
That's basically my investment strategy. You just buy the dip and double down. Set an interval that you want to buy at. If it's every 5% or every 10% it drops, you want to put a certain dollar amount in, and then every single 5 or 10% drop, just keep doubling down, lowering your cost basis.
And by the way, the math of this is something probably worth mentioning. The reason why you sort of might want to double down here as opposed to at a roulette table at Vegas or at on stock is like if my Apple stock goes down 80%, it's probably because Apple's fucked. There's something really, really bad, right? So in the stock market, anything lower than like a 40 or 50% dip is oftentimes means some sort of calamity has occurred, especially when you get down to 80%, right? Whereas, in crypto, that's just like Tuesday or whatever. So the thing is, the hypervolatility is something you want to take advantage of. So if you want to get the benefit of a logarithmically or exponentially rising asset, right? In my mind, I should be investing exponentially if I'm expecting to experience exponential growth. I don't know if that makes sense to you guys, but so in a roulette table, or blackjack or something, the reason why you can't go and just double down is because there's just pure luck involved. And in a luck situation, the house can win before you lose all your money. In crypto, like for example with Bitcoin or a Luna or something that just is unlikely to go to zero anytime soon, the difference is the depth of the dip is actually a benefit to you. And every single time it happens, it's a benefit to you. You could just sort of like find if you have capital available, because even if it's small amounts, like maybe I don't have the ability to go crazy now because my Luna amount is high. So there's no way I'm going to be able to keep adding exponentially in forever. But the difference is that even if I do a small amount today, right? Like let's say I'm like, hey, I'm going to throw $100 at it because I dropped it, that's all I have. I have $100, but if it dropped another 10%, I could throw $200 at it. It doesn't have to be extraordinary amounts of money, because in crypto, the time it takes to bottom and then to sort of explode again is usually in the 3 to 6 months range. Typically, in a bear market context, that might be even a year or two in theory, right? So anything that you have, you should be able to ride down to whatever you need to if you have to, because what you don't want to do is really usually you don't want to sell low. Obviously, that doesn't make any sense. But if I am starting really small, then I'm going to have very, very low pain at the bottoms, and I'm going to be able to deploy most of my money at those points and keep my capital relatively liquid. Because if I'm in the red and I don't really want to sell if I have to for some reason, and I need to personally keep most of my capital liquid in case I need to sell it for some reason, well, then that might be a way to sort of dynamic dollar cost average. It may not be the most lucrative thing at any given moment. Like had I just gone, guns blazing when, Luna, dropped from 30 to, I think it was $35 to $25. I used some portion of my borrow power. If I used all my borrow power and just went nuts, I would have done better now. I would have, really made a lot more money, but I would have taken a lot more local risk. And it's easy to say in retrospect, hey, I should have done this or I should have done that. But the reality is at the time that you are taking that risk, you don't know the future. And it's really, really easy to second guess yourself after the fact and say, well, my strategy, I would have done so much better had I sold this at that price and I bought this at this price. And that's all just woulda, coulda, shoulda. The reality is to have a scenario where you never lose money requires a very specific pattern of behavior, and it typically involves not selling low and actually buying more out of the bottoms.
Yeah, it's like what you said before, don't realize your losses and you will never lose.
Right. And it makes sense if you have an asset with a very, very strong fundamental to buy bigger going down, right? You don't want to buy some garbage coin that can literally go to zero as it continues to like make its way to nothing, like a BSV or something like that.
Right.
There's some things that just make zero sense, and even if the immediate price effect is like, oh shit, I should have gotten that shit coin, look at 1000x or whatever. The reality is like, yeah, maybe with $10 you might do something like that, but the reality, you're not going to throw your life savings into some random garbage coin just because you might write up a might write up a pump or something like that. So
I have a couple risk mitigation rules that I follow to kind of keep the assets and especially the borrow positions safe. So one is that, I buy on red only. And if I'm going to ever buy on green, it's a small dollar cost average entry into something that, could potentially keep running, but it's something I'm going to DCA for a while. So I only buy on when things are dipping, and that works out really well. The other thing is when I take a loan out of Anchor Protocol, I deploy that loan in a strategy where I can repay 90% of my borrowed position immediately. So, whether that's using, Nexus Protocol and just making the bonded Luna and Luna, or whether it's, putting in like a Luna B Luna liquidity pool on a market maker, I can easily just take those possession of those assets and immediately provide collateral to Anchor Protocol, so I never get liquidated.
So guys, to conclude this portion of it, we're on to our last question for the Luna community, and that's why should everybody in VGX invest into Luna and the Terra ecosystem?
Well, I think I covered most of it. Like I could. There's literally I can make it like a multi-day freaking seminar PowerPoint presentation. It's unfortunately that bullish. Like there's so many things happening at this point that it's just impossible to keep track. And many of these things are super value accretive for Luna itself. So, really. Very hard to find a whole lot of really big negatives. Maybe, and people ask, well, what about the regulation of stablecoins and this and that? Well, the regulation of stablecoins is basically also bullish for Luna for a lot of reasons. So there are, every negative I can think of generally comes back to be a positive, and for the most part, I think my confidence level is higher than for most coins in crypto today. And I think I've probably made that much clear. And it's not because I just hold a lot of it. I literally buy more today because I have that conviction over the next year. The big thing I think for the coming year is not only this just laundry list of value accrual protocols for Luna itself, but also the huge demand for stablecoins and the vast amount of increased interest among centralized exchanges like FTX, Binance, and other big ones, where I think they're looking for reasons to replace their Tether and their Circle one day. And once they're convinced that UST is stable enough, then everyone's going gun blazing into putting in bots and everything else running on UST as opposed to USDT and Tether. USDT and Circle, USDC, and really, UST is the most obvious choice right now, and the one that's made the most inroads to that. And so the more volume you see on UST, all that, by the way, ultimately leads to eventually fees and things that come back to our platform in the form of your staking yields and everything else. So a lot of cool things happening, and I think the growth for the next 5 years or so looks really, really amazing. And like I said, it's not to say that something else couldn't go up more. But I think as far as large amounts of capital, this is definitely one of my safer places to park my personal money.
Thank you very much. Obi,
I wanted to ask a question on that real quick, if I could. In terms of potential risks, the only one I'm seeing right now is if they decide to turn the on and off ramps off, right? Or try to limit those. How do we get around that?
Well, technically speaking, that still doesn't prevent you from sending any other crypto to the Terra blockchain via other exchanges, right? So really, at the end of the day, you can get there either way. I think there's not a good reason to believe at this point that really there's going to be some kind of blanket ban on, say, quote unquote stable coins. Now, there could be on Circle and Tether theoretically, because essentially those are securities, because you're basically borrowing these off of those vendors. So UST's got to be the more secure of these, because officially UST is not a dollar, right? It's not even advertised to be attempting to be one. What it is it's a its stabilization mechanism is partly algorithmic and partly due to demand, and the people give UST the value that it's worth, right? It has nothing to do with like anything else. So it'd be very difficult to regulate, is my point. There's really not much that can be done about it, is the way I look at it.
And let's face it, we've had an on-ramp problem for a long time. And went from whatever, $5 to 100 to 90. So part of the bullish news that sent us up there was the fact that Binance finally listed the native coin. What happens when Coinbase lists it? What does that look like?
No, I'm completely bullish. I was just playing devil's advocate.
Yeah, there's another element to this too. If you look at like the number of global communities in Terra, whether it's Europeans, whether it's South Americans, Central Americans, and the various like just international communities involved, what you'll kind of come to realize is that all of these people need sort of dollar price exposure, and they get that through this ecosystem. And none of those people give two shits about what the regulations are, say, for example, in the United States. So at the end of the day, like there's, like Hutch said, where Terra's gotten so far was heavily on the backs of actual Asians and such using this protocol, not even Americans specifically, because it wasn't even on a lot of exchanges at all until like Voyager and a few others early this year. But it was really hard to participate in Terra originally, which is why so many people like missed out on the growth of it, and it just became like this, I don't know what the right word is, but it's just kind of like this thing that came out of nowhere and basically caught a lot of people by surprise. And, a lot of people couldn't, quote unquote, get in early because they just didn't even know it was a thing. And it was actually just being used already on the Chai app, like last year already. And so people that were really in it early knew this was going to be big. They just didn't have any way to like really onboard a bunch of us who had no idea what the hell was going on.
So Hutch or Obi, do either guys want to answer the question in regards to why VGX holders should get into Luna? And then we're going to start taking requests because there's quite a few people.
I'll let Obi go. I think everybody needs to do their own research, but lots of compelling reasons, and don't miss the bullet train.
Yeah, CFI covered it pretty extensively. It really is one of the best tokenomics out there. It's got, in my opinion, one of the most important use cases in all of crypto, which is decentralized money. And it is effectively the DeFi layer 2 of all of crypto. And the protocols that we're talking about are not going to only be on the Terra blockchain. They will move and migrate around to other blockchains and proliferate across the crypto space. So it's don't miss out on it. If you're worried about on and off ramp, there's solutions coming. If you're worried about security, there's the Secret Network, which is also partnered with Terra, and there's opportunities there to be a little bit more private in your transactions if you elect to be more private. And I would just say, if this went over your head at all at any point, check out learnterra.io. And there's a lot of good information resources there. If you go to terra.money and you read through the documents, there will be, a list of the products and how the stablecoin seniorage process works. And you can really do a lot of your own research in those two areas. And then there's a lot of great YouTube channels and Twitter spaces. CFI hosts them, I think, almost nearly daily. Hutch has a YouTube channel. There's a lot of good resources out there. If anybody needs recommendations, send me a request and I'll I'll refer you to a place to help you along your research journey.
So we're going to go ahead and open up the floor for questions. I'm going to try to limit this to around 10 to 15 questions. We're going to go with Eat Your Peas, Camilo, Gerald, Danny, then Indir. I'm going to invite you guys all up at once, but please be respectful of the order. So I'm going to go ahead and start adding speakers. Go ahead and eat your peas. Can you guys hear him, or am I lost in the blockchain?
No, it still says requested.
Yeah, I hit accept. Yeah, he just went off. I don't know what happened. Go ahead, Gerald.
I got nothing.
Gerald, you're on mute.
I think everybody absorbed every word and everybody understands everything.
Wow, holy moly. Okay. Go ahead, Danny.
Yeah, hey, there was actually a couple points / questions, but I'll kind of just keep it short. So I didn't see who was actually speaking at the moment, but like they had mentioned, with Apple, let's say dropping like 50% and whatnot. So I know, in doing options. So if it drops 50%, I mean, if that happened, it'd be very unusual, but then you would know that there's something that, caused, that huge dip. And then I would go in and buy it, because something that usually drops that much, is just kind of like an event, that may not even be related to it. And it could be like a sector based, and then, you just write it out. So you're buying the dip. But see, then I can look at data at the 20-day moving average, the 50-day moving average, the 100-day moving average, even on stocks that are not as volatile. So the thing is with crypto is like, are you guys, the way that you trade it, is it just basically set on a price? Like you have a price and like what it was before, and if it dipped, $3, and so you already know what the past price is? Or is there other type of data that you're looking at in a sense of like, this particular company is going to have an earnings report, and they did really well, within every quarter, within the 3 months they're going to report. So you're going to buy it on that and write it out, because you would say, okay,
so
quarter.
Yeah, let me kind of get into that just briefly. So on some coins like Bitcoin, you can use things like the amount of Bitcoin on exchanges, which typically reflects the possibility of sellers. That's just one example. On Terra, more recently, there was a known sort of player that was buying like 3 billion. They were minting 3 billion UST. And therefore creating, a lot of buy pressure on Luna as a result. So that would be some of the kind of like off-chain fundamentals kind of things that or on-chain fundamentals that you might sort of look at. Now, not every coin and not everything has this. So like you said, sector drops like today, you can have lots of stuff in DeFi fall simultaneously, just because there's a lot of correlated assets with a lot of robotic trading, and you see that these kinds of behaviors happen. And there's nothing really wrong with that. It's pretty normal. But the idea in crypto that you're going to try to sort of take any moment's day-to-day activity and try to pin it to a definite sort of event. There are a fair amount of event-driven things that happen in crypto, like the release of certain let's say DEXs or something like that might drive buying pressure or whatnot. But unless you're really keeping track of all that, the odds are that the real thing you need to know is how good are the fundamentals of the primary coin that you're interested in, and would you get more if it went down or not? That's really the only two questions you really have to ask yourself. Because if the answer is you want this coin, then you probably ought to want more when it goes down, and that's about the end of it. I don't think you have to overthink it beyond that. And then not only that, but your time preference, obviously. So, how long can you wait for it to, quote unquote, go back up or whatever?
Right, and so there's no basically, like if you're doing options, you can see the calls for spreads. I'm sorry, calls versus puts. On that particular option, and so there's no way of actually saying, okay, there's a certain amount of people selling, there's a certain amount of people buying.
There are some websites that have aggregators, by the way, of both futures and liquidations and such on various exchanges. In fact, someone shared one with me today, and let me kind of mention that one. It's Coinalyze, COINALYZE.net, and then there is a page for Luna liquidations. And Coinalyze has some of this data aggregated amongst several major places that offer, margin positions and whatnot, and that might give you some idea, what's the funding rate look like, and does this situation look sustainable or not, and whatnot. But the problem is, even when you have all that data, it doesn't actually solve your problem, because the sector can fall irrespective of your individual coin, and because of the correlation in the markets, it can dump anyway, even though the numbers look good. So you really, I think the best way to think of this is just expect things to fall all the time, and if they go up, that's awesome. But you need to mostly figure out how to take advantage of the drops if you're an accumulator, and that's really all you have to try to do, I think, in my view.
Yeah, can I share a totally different approach? It sounds like, Danny, you're coming from a trader's mentality, which is totally cool, and that's where I came in. But once I did my own research and I realized, holy shit, this is different. It's literally going to the moon. Now I'm really just buying any relative dip. And I'm going to share a couple tweets that I read or I saw back when there was a dip in October. And I was telling a lot of people about it. It was in the 40s, and then it fell to the 30s. And one tweet said, I bought the Luna top in March when it was 20. Now people are dying for it to go back to that level. Waiting for a dip should be a privilege for those that are already allocated. The risk of not being allocated is too high when it comes to Apex assets. That was one tweet by LegoMakers.ust. Another one was by Adam J. Cheshire. He said, I got in on ETH right before it hit its stride. Whether that was 350 or 390, I don't really know. As a matter of fact, it doesn't matter now. Why I say that is trying to time a buy on Luna makes no difference. Just ape in. You have to do your own research and get to that place yourself to change from a trader's mentality to an investor's mentality, a long-term, lifetime holders. And it's been months since I did that myself, CFI too. But once you really understand this coin, I think that's the place where most of us get to. And then it's just a matter of when it dips, how much cash flow do we have coming in from income? How much can we safely borrow against? How much are we going to allocate to?
Mm-hmm. Yeah, no, I definitely appreciate it, guys. And just on the last point, am I mistaken, with other kind of how you guys are calling shit coins, right? Is that just kind of equivalent to what penny stocks are, for the market?
My take on that is it's just there's a wide, or anything outside of Bitcoin is, if you ask a Bitcoin maxi is a shit coin. But the reality is that there's a lot of projects that are legitimate, that have real world use cases, and that's really where your do your own research really comes in, and it's really, really important.
The term shitcoin was just an arbitrary derogatory term just used for whatever, and that was common because early on there were a lot of garbage projects and things and nonsense that just literally was complete pointless garbage, and then so the Bitcoin crowd really sort of looked down upon a lot of that. But the problem is the Bitcoin crowd entered a period of sort of disbelief, right? For example, back when Nokia was all the rage, and that was 95% of your cell phones were Nokia, it would have felt extremely weird to think you would be in a world where Nokia did not rule the world of cell phones. It's actually quite unusual that they got their ass kicked so quickly, actually, if you think about it. But basically, there is sort of like this concept that these other things won't be very good, or, that maybe you get so wrapped up in your own ecosystem. Like, let's say we as Luna people aren't paying attention to what's happening on Avalanche well enough. So we think all our shit's the best shit, and like, we don't realize what's good in other things. And that can be, of course, a blind side for you. And you sort of have to sort of be in a little bit of each thing. You probably even have to be burned a few times, quite frankly, to find out how to get screwed a couple of times in any asset class, whether it's crypto or otherwise. I think that's just part of it. If you're not playing in it, you just don't know the dangers or whatever. Which is why it's like, if you're not sure what something is, you have no idea, throw tiny money in it. Like, just play around. Don't go nuts trying to gamble your way to the future. So I allocate much heavier on something with a high level of confidence than I would just buying garbage.
Yeah, and that was really well said, Sefi. And it's all about the due diligence that you do and understanding ultimately what are you looking to get out of it. And that's kind of where you start with your research. And, hop into Twitter Spaces. See if I host this stuff all the time on the Luna portion. We host it for, VGX and Voyager. Hop into Twitter Spaces and see why people are so passionate about those items. But it ultimately boils down to the research that you do, ultimately, when making a decision. But find key factors that matter to you and matter to a lot of people, as far as like a good community, and stick to them. Like, Luna is by far and none, to me, so far advanced with the way that they, give you your information and, just DM us, DM people that are, involved in projects that have real world use cases, and we can give you a good basis to go off of. But I mean, VGX, Luna, I mean, those are great places to start. But most importantly, find a way to get some passive income, and then utilize that passive income so your cost basis is nothing. That's a great place to start too. Start with the Terra network or a Voyager, where you can get some kind of interest and use that interest and start dabbling into projects. That's always an effective way to start.
Yeah, I mean, like, just VGX as an example, over a period of 3 years, my cost basis, if I just simply auto compound my yield, right? So let's say I, make 21% yield. It's actually higher than that because it's compounding. But let's say it's like 24% yield. I've reduced my cost basis essentially over that time, because that's basically coins I'm getting for free. So it's an inflationary reward as an example, but like my risk is going down with every month that goes by when it comes to these types of things. So that kind of gives me an additional comfort that over the longer term, like my cost base is actually falling as we go. And that makes a big difference in all these things.
And one thing you'll learn with us, Danny, and this goes for everybody that's on the speakers panel, is that we try to do right by the community. We're not here to shill items. These are things that we're truly passionate about. Just stick to, pick some people that you see as influential in the space. Obviously, do your own research on that too, because there's a lot of bad actors out there. But just start off slow and let things come to you. There's no reason to really jump off the deep end. Just pick a few projects, learn everything you can about them, and that'll be a great starting point for you. Do you have any more questions, brother? Danny?
Oh, no, that was great. Thanks, guys.
Yeah, no, thank you so much for being here. It's a pleasure to see you here. We're going to go to Camilo next, and then Indir, because Camilo was first, and he got kicked off. So go ahead, Camilo.
Thank you, guys. So I have a few questions. The first one is my appreciation. It is that the success of UST in certain way depends on the failure of USDT and USDC. And for both of those coins, there could be a crackdown. But what happens if there's no regulation for any of those coins? Will UST growth be only organic? I mean, it will take a long time to catch up with those stable coins that are already consolidated.
Well, so far, the growth of UST has had a faster trajectory than those coins ever did in their heyday. So just the sheer velocity so far has been high. Will that continue at the current pace? That's obviously all like sort of speculation at that point, but it also depends on how many use cases are coming out for UST, which there's a lot of them. So some of the big neobanks like Cash.io, which is run by IntelliBridge, I think is the name of the company, Alice Finance, Tick in Australia, Chai in South Korea, like there are actual infrastructures being built where you can spend and buy shit and off-ramp and on-ramp and everything else for UST that is much broader than Circle or Tether had in their day. Now, you know that Visa sort of inked a thing with USDC to sort of like support that ecosystem. So Ethereum in general and its ERC20 tokens and whatnot have quite a bit of a head start, obviously, in that regard. But I think what's going to draw people to the Terra ecosystem is the fact that Luna's tokenomics are just superior to most everything else. So you're going to get a combination of the UST crowd and a combination of the Luna crowd and some mixture of that. So yeah, there's just a lot of growth potential. None of us can really see the future for sure, but in the form of Terraform Labs, you have a team that is actively engaged in building adoption of these things. They're not just sitting by and kind of waiting. And the Vertex protocol, which I would definitely look into, looks like one of the big major developments coming. The other major development I believe is coming is, well, you have the Ozone protocol, which is the insurance protocol for UST Anchor, and then PEG stabilization insurance. Yeah, that's another big major amount of money, like $4 or $5 billion. And then there's going to be I'm not sure if it's going to happen yet, but there's like another billion or so that might go into a Bitcoin acquisition system to create essentially a money market of cryptos that you can peg against that are not necessarily just Luna. So in other words, you could create arbitrage pegs within the ecosystem itself that are much more aggressive than they are now. So all sorts of interesting things happening. And I think, so far, every time I think to myself, well, like how could UST possibly get to 10 billion that quickly? Then here we are, right? So Doe's latest concept was to get us to 100 billion UST by I think he's hinting at next year, which that's a shit ton of UST. Now keep in mind too, Camilo, a big thing too is we shouldn't assume that crypto is going to be at a 3 trillion market cap in 10 years, right? We should assume that that's going to be like 50 to 100 trillion. I mean, this is the speed of adoption of crypto right now exceeds all technologies in the history of man, like bar none. Cell phones, cars, computers, internet, everything. So the growth pace is beyond extraordinary. So I think you should assume, my presumption is that 10 years from now, we have $100 trillion market cap of crypto. And Luna's market cap could itself be $1 trillion market cap, right? So that's the theory in my head, is what I'm looking at. So is it going to be the big winner? It doesn't have to be the big winner. It could just be like one player in a series of things, which, you have MasterCard, you have Discover, you have different banks. You have all sorts of ecosystems with different pros and cons, and you use those. And you want that competition, right? The idea that you're going to have a currency, and you want all of the things, all the world's money hinged on one thing. You probably don't, is my intuition. And
let's take it back to a philosophical level. Doe's saying is beautiful. Decentralized finance needs decentralized money. And you're seeing more and more on Twitter, a lot of ETH whales moving away from USDT and USDC to UST because it's decentralized. I mean, that's why all of us early adopters, why we're attracted to crypto. I realize the normies, that a lot of them that aren't here yet, they may feel better that Big Brother has a bunch of money in a vault somewhere. But just from a pure decentralization standpoint, I think more and more of the early adopters are getting comfortable with it. Not to mention, there's a bunch of partnerships like with MIM, Magic Internet Money. And what I've realized with Doe, because tweet something, he delivers. And it's like what CFI was saying, the velocity at which he delivers. So if he's calling for 100 trillion by next year, that makes me all the more bullish.
Yeah, and these exchange pairs are going to move away from USDT. especially if it gets, under the lens of the audits and regulation again. It's just only a matter of time before just the exchanges start using UST in general, right?
And by the way, there's no regulatory regime that's finalized. It's not like just because this year the SEC or the Treasury Department or whoever says that this stable coin or that stable coin is legit. There's nothing preventing that from not being the case years from now, sometime down the line. So the reason why decentralized finance needs decentralized money is because, like, anyone who's building a massive infrastructure, like let's say you're going to build a massive store, like a drop shipping application like Kato Money, like you don't want to build that on something that's basically going to be essentially rug pulled down the line, right? That doesn't make any sense, because now your whole enterprise is fucked if something happens. So major businesses don't want to build on a layer of extra risk, and that's, I think, the intuition to keep in mind. I think that's the big thing.
Great, amazing. My second question is, and this might be a noob question, but what happens if you wake up one morning and Ankle Protocol and Stater Labs is gone? I mean, can something like this happen? Is there a risk there that suddenly it just disappears and people lose all their locked value?
Well, not exactly, because remember, your money is locked in a smart contract, right? So the smart contract doesn't just sort of disappear. So once you've entered into a smart contract, the ability to enter in and out of it is going to be there. Now, it could be a pain in the ass if the actual protocol wasn't sitting there, because then unlocking from the smart contract gets interesting. But yeah, anytime you're talking about smart contracts, you're talking about DeFi, there is an element of centralization risk. It's not the same thing as owning Bitcoin, for example. So you need to there's definitely an element of keeping that in mind. Like, how long is that protocol going to be a thing, right? Or how long is a validator going to be around that everything is stable? These are all concerns that part of the reason why you should have some level of diversification, and you don't want to have every egg in one basket, no matter how awesome it seems.
Yeah, great. And finally, my last question.
Oh, hold up, yeah. Camilo. He brought up, just in passing, a protocol that's coming out. I believe it's Ozone, and it's going to the earn, where people are earning 19%, and it's going to be insured, and Anchor's in talks with an actual insurer that is going to insure against depegging risks and smart contracts. So if that's something that just say, there's such a big, the smart contracts could have been cracked, well, all the money be gone by now. I actually heard that from a developer who said, I get worried too. What's been in there for a while with the big honey hole full of money and nobody's cracked it? I'm not that worried about it. Smart contract or depegging risk. Maybe you earn 15.5 or whatever that looks like, and it's insured. So maybe something like that's for you.
Yeah, correct. It's some sort of insurance, decentralized insurance as well. Guys,
there's already insurance on Anchor Protocol, and like Hutch and CeFi said, Terraform Labs' own form of insurance, which is Ozone, is coming out as well, which was funded from the seniorage of the Terra Luna swaps from pre-Columbus 5.
Great. Yeah, I'll have a look into that. And my final question for you guys is, what are your general thoughts on Kadena versus Luna or over Luna? Is there a conversation like that?
I don't think it's a question of over or whatever. Like, they're just very different blockchains. One is a Cosmos-based IBC chain. Kadena's announced that they're going to have some IBC compatibility from the start, so that you'll be able to ultimately interact between them. And Kadena's also acknowledged that basically UST is going to be one of their major stable coins, because they obviously want to bring in Terra liquidity into their pools. So, and that's another thing to keep in mind when people ask about UST and adoption. Once UST gets to a certain size, it's basically just a pot of gold, and every ecosystem is going to want some of that pot of gold in their ecosystem, right? So there is a incentive to actually bring UST into any new ecosystem that might be. So I think you're going to see that with Kadena. That's a very different chain with different use cases and whatnot. And and can also be very good. I have plenty of that as well, and I learned about it from some of the lunatics around here, and got into that. So that's one of the nice things about these spaces and whatnot, and as well as Twitter, is you do learn about new tech and new ideas. And but as far as comparing one to the other, there's lots of comparisons one can make, and that could be a whole discussion into itself. So probably not worth getting into right now, honestly.
Yeah, but thank you so much, guys, for answering.
I just want to throw out there, because I don't know if it was thrown out there already in prior discussion. I'd had some internet problem, but through the bridges and the wormholes, Terra is already on over 10 other blockchains. When I said it was the decentralized layer of finance for all of crypto, that's not, it's not limited to its own chain, right? It's on Harmony, it's on Ethereum, it's on Phantom, it's on Solana. The list goes on, and it's just going to continue to proliferate, whether that's DeFi or CeFi. Did we touch at all on the governance mechanism and the decentralization? I wouldn't want that to pass in a session like this before.
We didn't get too into it, but any of the protocols on Terra, or most of them, have, including the primary, the Terra forums, there is usually voting involved, and if you have staked positions, then you can use that to vote on proposals that happen. So any major protocol proposals from like Terraform Labs, it's usually up for a community governance vote. That's true of Anchor Protocol and quite a few of the other protocols. Most of them strive to have some element of starting centralized but try to become decentralized as time goes on. Tends to be the theme. If you learn a lot actually by following the forums of those protocols, and depending on how much far down the rabbit hole you want to go with involvement, there's just simply owning a coin, and then there's actually participating in its governance and how those protocols actually develop, and really more so than my voting power in that, which might be relatively small compared to everybody in the community. I find that being involved with those things really helps you understand the nuances of the pros and cons of your various coins and protocols. And because until someone says, hey, what happens if this happens and that goes wrong? Or wait, what about this security hole that we found we need to patch? If you don't even realize those things are an issue if you're not sort of involved and have your, you sort of get into it. And, all of us have a certain amount of time we want to spend on these things too. Like here we are, spending an evening doing a spaces on this subject. Other people just want to just buy something and invest, right? So your involvement is going to be very different, but the governance angle is part of how decentralized finance works, in that your tokens usually have, or for example, I think VGX will have this in the future. Luna has this now, where you basically can vote on governance proposals or even propose certain governance proposals, and people can decide whether or not those things should pass. I think one of the groups wanted to create a big party, for example, for lunatics sort of thing somewhere, and use a big portion of funds to hire musicians, the works, have a freaking real conference or an event kind of a thing, and Lunapalooza kind of thing, yeah. And I think that when the vote was going negative, meaning many people didn't want to do it, because I think the problem with those kind of things is it's so hard to figure out where the funds are going, right? How do you keep people accountable off chain for doing these kind of activities and making sure that money's spent well? That gets really dicey, I think. And that's really where that governance proposal, as an example, went negative, meaning people voted mostly no, I believe, and probably won't pass. So I think there's things like community funds and their usage, and things about changes in the protocol that come up for vote. And it can be interesting to just see how those play out, just to kind of understand DeFi better. And I think you learn a lot by it, as more than you do make a big difference in the voting process.
So we're going to go to the last.
If individuals aren't casting their votes in Terra Station's app, right, then it defaults to the staking providers. Right.
Right. Basically, yes.
Go ahead, Indir.
Hello, all. Firstly, thank you, everyone, and relatively new to the ecosystem, but still trying to, wrap my head around Terra. Firstly, I mean, I'm just impressed by the ecosystem, the incentives, the decentralized and global nature, and just the sheer amount of things that you can do with UST. But still, the skeptic in me is just trying to figure out, some of the potential risks or that can impede wide-scale adoption. And one of the things I've been scouring the internet to find an answer to central bank digital currencies, especially if US Fed tomorrow comes up with a currency, how can that kind of impede a wide-scale adoption for an average Joe? So if you guys can just speak to that, and that'll be great. Whether it's a coordinated effort by central banks, or which I highly doubt it, but I mean, how would that work?
I have a pretty strong philosophical view on this. First of all, CBDCs are probably one of the most evil things that could probably be perpetrated on the human race at a level and a magnitude with which only my imagination can figure out how to murder all of you with it. So I would strongly suggest going away from it unless you want me to kill all of you, quite frankly, with it. My imagination tied with the CBDCs could basically dominate the entire planet. I shit you not. So when I say this out of extreme concern. My concern is more so that CBDCs are a massive control lever for the human population. That's so dangerous as to not even be it shouldn't even be a point of discussion. And I think a lot of people in the U.S. government who are more libertarian minded in particular know this and understand this, which is why they've been pushing. Some of them have actually been pushing more ideas about DeFi and about Bitcoin. And the reason for that is because they understand that ultimately once this control is given up by the human population, you're just never going to be able to turn that wheel backwards. So UST is the closest thing we have right now to creating that kind of decentralized system, along with some other crypto-based native sort of algorithmic stable coins that quite frankly, I hope all of them succeed. Because really, that's the faster we adopt this, the actually safer ultimately the world becomes. And I think even functions like Secret Network, what Tor is doing with Secret, is really important long run to preventing sort of totalitarian states and such. It's really I can't even begin to, if I get into I could do a whole discussion about how bad this is going to turn out, but you don't. So I think ultimately short term, let's say a CBDC were to exist, for example, what's happening in China, to some extent that will lead to more adoption of sort of digital asset type things, because you'll have a big on-ramp and you'll have the check mark from the government, so to speak. So, but I think the immediate, most obvious thing I would do is if the government, starts using this, I would basically convert all of that to something decentralized immediately and exit that one way or the other. So if I'm getting my tax return in some state, some CBDC of some kind, I'm going to move it to some decentralized asset immediately. So I think there's a substantial portion of freedom-loving people on this planet who would basically dump that shit like you wouldn't believe. If you just look at the amount of people that are sort of anti-vaccine, for example, don't even get into the discussion of medical, issues. Just look at it from the perspective of how people behave when it comes to concerns about quote unquote authority. While you may or may not, agree with the vaccine crowd, one thing that they are sort of just anti-authoritarian just by nature. And I think those people are going to have a real hard time swallowing the CBDC pill. If you think they're going to have a hard time taking a vaccine and whatnot. So I think there's going to be a lot of people that resist this at a core philosophical level, including those in government, by the way. I think the people in government especially are the ones who, if they decide to give this control to some, computer system, essentially, you're basically going to create there's just too many ways to manipulate that system to benefit individual actors over the population. And that would be my sort of take on this. One is it's a gateway, if they do have these, to other crypto. But the flip side, or legitimization of it, on the flip side, there's going to be this sort of backlash against centralization. And as there should be, I think.
Do you have any more questions, Indir?
No, thank you. That answers it. And yeah, in my mind, I kind of know it as well. But yeah, it's just that, when you're trying to assess and quantify risk, it's always good to hear from the community, how they think about it. So no, thank you. Thank you for that.
Yeah, and another argument is, so if the U.S. government, as a good example, because UST and USD is the number one sort of M1 currency on float globally, it represents most of the currency on float on the planet. If the U.S. government decides, hey, you know what, we don't want quote unquote stable coins pegged to the dollar, well, the DeFi community, is pretty creative. And what we'll do is we'll just simply peg it to something not the dollar. We'll peg it to, say, for example, the euro. And if they say no, well, we'll just peg it to average global temperature or something. It doesn't matter what it is. In fact, if the world pegs actually to a deflationary or a stable currency, then the dollar's wholesale fucked. The entire globe's every single fiat goes to zero, right? So there's a substantial danger to the U.S. government for basically the pegging away from the dollar. So if anything, for the U.S., I would make the argument that that they want to encourage the digitalization of dollars in a central bank digital currency format to basically encourage people transacting in what people perceive is a real dollar, whether it is or not. Well, hell, even to the actual U.S. government, no one gives a shit anymore how many real dollars are out there. If you haven't noticed, we're printing money to infinity, right? So nobody seems to care either way. And the only thing people care about is that energy reserves like oil and such is denominated in dollars. And beyond that, it's all plus or minus, right? So that's just my general, macro take on it.
Thank you for the question, Indir. So guys, that's going to go ahead and conclude the community mashup between the VGX community and the Luna community. I want to say thank you to the speakers for your time and answering questions. I want to say thank you to the audience for showing up and learning about VGX and Luna and the Anchor protocol. You guys have a good night. Take care.
See you later, guys.
All right.